All right. Good morning, everybody. That's okay. And I wasn't saying anything yet. That happens sometimes. My screens start moving, and people are like, "Oh my gosh, I can't hear them." That's okay. I just wasn't talking yet. Good morning, everybody. Good morning, and welcome to the Nexgen Education Room. I'm excited to be here this morning. It turns out I'm excited to be here every morning because I like what I do, right? And I like teaching you guys. I like helping you guys get to where you want to be, get to that point where you told us that you wanted to be. And we're going to work on it together today. We're going to go hand in hand, right? Gary, it's probably my cavernous brain. Not much in there. You're probably catching the echo off of that. Sound waves bouncing off my skull. I don't know. I'm sorry, guys. I promise I have all the latest technology. Good morning, Lady P. Good morning, Debbie. It's nice to see you guys. Um, I have a crazy idea today, guys. I'm going to do what we did yesterday. And I'm really thinking that I'm going to do the same thing tomorrow. And I'm probably going to do the same thing over and over. And I'm going to talk a lot about rules. And I'm going to talk a lot about the best looks. And I'm going to talk about creating a foundation for your trading plan. Creating a plan. Good morning, PFI. Creating a trading plan that takes the burden of hope, of fear, of emotion off of you. And it gives you something to focus on, something to keep you in a position where you can develop the confidence that comes from the memory of success as you progress and learn your charts more, as you learn to read your charts more. I want to remind everybody that this is very much a marathon. It's not a sprint. And everybody's in a different spot. Everybody goes at a different pace. Everybody is going to do things in their own time. The one thing that I do know for certain is that we're going to do it together, guys. We're going to go through this together. And it's a pretty simple process. The step-by-step path to becoming a confident trader is really simple. You take a picture like PFI did. Hey, good morning, Jose. And I click on the link. And then PFI and I have a conversation. PFI and I, he's asking, hey, Mark, is this a 50-50 or a high probability? Well, PFI, you don't have the advantage of momentum, do you? No, but you do have a clear path, right? And you do have an area inside of favorable large triggers. So while it's not the typical 50-50 trade that we teach, you've sacrificed one of your advantages and you've insisted on the other two, and you took the trade beautifully. And guys, this is what's going to happen when you learn to read your charts, is you're going to go outside of that basic teaching. You're going to go outside of that foundational teaching, and you're going to begin to recognize patterns that bring you success. But the foundational teaching is what's going to give you the ability to stay calm, to recognize the easy stuff and keep it easy while your brain begins to process more things. So post your pictures in class, guys. Get feedback on everything you do, especially the losers. I love talking about your charts. Remember that I don't tell you how to trade. I don't tell you what trades to take. I don't tell you what trades to avoid. What I will do is I'll talk about the looks that have been proven through study to bring the highest level of success, and I'll offer that in front of you and hope that you stick to it while you learn to read your charts. And then there's a real-time performance spreadsheet, guys. This was provided to you by Nexgen. It's in your Nexgen Study Picks folder. And this thing is absolute gold. The first page is your trade tracking sheet. The first page is where you're going to put everything that you do in there. So PFI, that trade that you just took, right? If I open it up and I'm looking at it, I'm going to steal that link. And I'm going to go to the spreadsheet. This is what you should have done yesterday. I hope that you did. You're going to drop that link in there. What kind of trade was it? Well, where's my drop down? There it is. We'll call it a 50-50 because you didn't have momentum, right? And then how did you feel on that one? I would have felt confident. because I'm coming from a strong top, right? But my triggers were kind of anything can happen. And that was the problem that I had to recognize. I could even take that and maybe go, hey, this was a challenge in the trade, but my 5-1 looked good, right? And I hit my targets. I hit that first easy target. I hit that second target. And then this is the important part. Without momentum, I made sure I had an entry and a clear path. And that's what helped bring that success, right? So PFI, did you go back and did you look at yesterday's trades? I know that you filled that one out today or yesterday, right, when you did it, but did you wake up this morning? And guys, you set aside just 5-10 minutes. This is what I did yesterday. This is what brought me success. This is what didn't. This is what felt easy. This is what made me stressed out. And what you're going to find is that there's a correlation between taking the correct trades and that relaxed feeling. You're going to find that there's a correlation between taking the correct trades and realizing what worked. And then by posting your pictures in the room, guys, we're going to begin to identify not only patterns in yourself, but also patterns in the market. Patterns that repeat themselves over and over every day. And we're going to talk about them. We're going to recognize patterns in you. Some of you like to jump in early. Some of you get out too early. Some of you like to trade in determination conditions. And some of you talk yourself out of every trade in there. So we're going to look at your trades every day, and we're going to have a conversation. It's like a one-on-one session. And I'm going to give you the best answer that I know how to give, but it's all going to revolve around the trigger line and Fibonacci rules for when it's okay to trade is provided in the room. As you begin to deviate, as you begin to move outside of these high probability trend trades that we teach, you're going to be developing a plan that suits your needs. You're going to be developing a plan that fits your risk tolerances. You're going to be developing a plan where you take trades that are comfortable for you. So I'm going to talk about the highest probability trend trade that we teach today, guys. I'm going to talk about this trade that happens after a termination condition that typically wins 70 to 80% of the time. I'm going to talk about this trade that only has 3 rules that provide 3 advantages. And we're going to keep it simple in the beginning that the recipe for a trade is momentum, a clear path, and an entry area. I'm going to teach you how to identify these. And what's going to happen is through the identification of these 3 advantages, what you're doing is you're developing a skill set. You're developing a skill set that turns you into a chart reader. Because 90% of your day is going to be reading your charts. And 10% of your day is going to be actually taking trades from the advantages present when those advantages are in place. And chart reading involves 3 key concepts, guys. You're going to be able to open up your workspace. You're going to be able to take a look. And you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And it's these 3 concepts that are going to branch you out beyond these high probability trend trades. It's these 3 concepts that are going to make you understand and be able to manage trades more assertively. That are going to be able to have you adding to the trades that you'll take that you'll feel comfortable taking. And the areas where the market is likely to continue is universal. It's not always the same. But where the market is likely to continue is the place where you're going to be entering your trades. And you're going to be able to identify it first in a high probability trend trade. It's an entry that's going to allow you to reduce risk, to maximize profit potential. Ultimately, you're going to understand where the market is likely to go. And this is going to help you with profit targets. Because every great entry needs to be managed. And then finally, you're going to understand, and most importantly, where the market is likely to stop. And we call these termination conditions. Termination conditions can reverse a market. Termination conditions can stop a market cold in its tracks. It can create a reaction that becomes untradeable. And these termination conditions, I'm going to share Norbert first thing for Ron. These termination conditions are where the sharks, the big money investors, the guy that moved the market, that's where they're reacting. That's where they're taking profits. That's where they're entering trades. And that's why these Fibonacci areas can be so volatile. That's why these Fibonacci areas can reverse the market, because we're not the only people that know about them, guys. These fibs are amazing and they're accurate. And I'm going to show you some examples of that. But what we can do is we can let these guys turn the market. We can let these guys create those advantages of momentum. I know that you guys just lost me. Discord is playing games with me. I'll be right back into the room, guys. I know you can hear me, and here I come. I promise. We are going to let the people that control the market, we're going to let the people that have more money, more influence, and the ability to move things around give us the advantages. And then, guys, we're going to behave very much like a remora. We are going to take the advantages that these guys produce and turn them into a trend trade. And these guys will give us momentum, a clear path, and an entry area. And that very basic scenario is going to turn you into a chart reader. Guys, it's amazing what you can accomplish when you're a chart reader. So I want you to be that focused. I want you to dedicate 20 days to just learning how to get good at that. And then once you're good at that, you're going to begin to see things that you never thought you could see in the market. The market's going to slow down for you, and you will literally be able to identify your trade setup in a matter of seconds. So we're going to talk about the trigger lines. We're going to talk about the Fibonacci rules. We're going to simulate. You're going to simulate every day. Get on that fake money, guys. Take the pressure. Take the expectations off. Work on your entries for 20 days, and then work on your management, right? Progression. Simplify. I say this every day, and I say it from the top of my lungs. Simplify. Get really good at one thing, and then add a second. And then when you're really good at the second thing, feel free to add a third, right? The more that you try to chase before you become a proficient chart reader, the more difficult your journey becomes. So I'm going to ask you to keep it simple. You need to learn the looks so that they become easy. Your spreadsheet will also help you with that because there's a section called the favorite looks. So every time your simple rules are met, you can put a picture in here. You can come back and study it, right? On the second tab of this one, I've got 250 pictures of rules-based entries. Some of them are my rules. Some of them are the simple rules. Some of them are your rules. But there's 250 pictures of entries here. And the one thing that they have in common is that they, in some capacity, embrace the advantages. Use market replay. Go back and fix your mistakes, right? Pause market replay. You can replay the day as though it were live. Pause it. Look at your plan. Trade your plan exactly on that market replay because you have the advantage of stopping the market cold in its tracks. And then see the potential for trading that plan. And that's why I encourage people to do market replay. You're doubling, tripling your repetitions in a shorter amount of time. But more importantly is you're testing the methodology as it's taught. You're testing it and you're proving to yourself that it does in fact work. You're proving to yourself that simplicity is not a bad route. And you're proving to yourself that absolutely you can do this. You just need to get the repetitions so that they become easy. Take all the pictures that you can and repeat this process every day. So guys, this is going to be your plan. It's the same plan that we've been teaching for years. It's the same plan that has been proven to provide success to people. It's the same plan that got a lot of you funded on your PA accounts with these prop firms. So let's embrace simplicity and let's look at the high probability trend trade, guys. 3 little rules: the advantage of momentum, a clear path, and an entry area, and 3 rules that are going to happen on 2 charts. And we use this 2-chart system, guys, because it's a refinement system. Your large chart, it's going to take 1 bar. I mean, literally 1 bar to recognize direction, momentum, and areas. You're going to open it up, and this will be almost instantaneous with a little study. This large chart's a broad stroke of a brush, and it shows the overall opinion of the market. What the sharks want the market to do, right? What the large crowd says the market's going to do. This giant group of traders, all of this control is creating the trend. It's creating the momentum. It's giving you a clear path. And then we're going to, when our first 2 rules are met, whoops, I accidentally closed out my picture. When our first 2 rules for a trend trader met, we're going to have the advantage of momentum and we're going to have the advantage of a clear path. That's when you're going to turn your eyes to a smaller, faster chart. That's when you're going to take the advantages provided by the large chart and you're going to refine that broad stroke of a brush and you're going to pinpoint where the market is most likely to continue. This becomes your entry. Rule number 3 gets you in at that point. It's going to allow you to reduce your risk. It's going to allow you to increase your profit potential. But the idea is simplicity first, guys. Let's become comfortable with these three advantages, identifying them until they become easy, and then we'll stretch out from there. And everything that we talk about comes from the tutorial section of the education page. There are no secrets with Nexgen. I don't hold anything back. I try to give you everything that you need to be successful. And then I give you feedback on the things you're doing outside of that. So we're going to go through, and the first thing that every trader has to be able to establish is the direction of the market. What direction is it going? Well, if the background is green on your large chart, you're in an uptrend, and you're only looking for rules to be met for high probability trend trades long. And if the background is red on your large chart, you're in a downtrend, and you're only looking for rules to be met for high probability trend trade short. And I can't stress the importance, good morning, Ziba, of just trading with the trend, allowing yourself to go with the flow, right? To do what the large crowd says they're doing. Once you've established the trend, rule number one says that we must have strong trigger lines on that large chart. Strong trigger lines are the second thing that you're going to realize. This is the second piece of the puzzle. Most of you are going to be able to recognize strong trigger lines in a matter of minutes, because in an uptrend, when the background is green, it means that your small triggers, these solid lines, have broken away from and above your large trigger lines, these dashed lines, and there's a separation between the two. This right here is your strong trigger look, and the strong trigger look begins when the small triggers accelerate away from the large, and it ends when the small triggers return to the large. And this is the point right here with that separation, that it is most favorable for buying a pullback at Fibonacci support on that smaller, faster chart. And you're going to see that pullback in one bar. You're going to see it as a tail or one of these wicks. This black tail is literally a pullback on a smaller, faster chart. And you're, by the end of your first week, probably going to have a great idea of where that tail is going to form. In a downtrend, when the background is red, the smalls are below the large are wide, they're angled in the direction of the trend. And that space between the two gives me the most favorable look, that odds favorable momentum, and it is the best time to sell a pullback to Fibonacci resistance. Strong triggers set the tone, guys. Strong triggers are the advantage that will even cover up mistakes as you learn to trade the market. Sometimes that advantageous momentum is enough to break areas. Sometimes that advantageous momentum is enough to carry a trade a couple points to get profits. We see a lot of those trades in the room. But letting odds favorable momentum lead the way is probably the biggest advantage you can give yourself, because when these weak triggers work their way back inside of the large triggers, we call it a weakening of the large triggers. You've lost the advantage of momentum. And now anything can happen up or down. And we see these weak triggers quite a bit when the market is turning, when the market is going from down to up or maybe up to down. And these weak triggers take away that first advantage, and it kind of removes the first part of the equation. So I'm going to ask, give me a Y in the room if you're comfortable with the idea. Strong trigger lines are going to set the tone, guys. And if you go to the live market, I'm going to take all of the trigger lines off, or all of the indicators off of this chart. And I want to show you just how easy it can be, not only to study, but to recognize strong triggers. Guys, the smalls are below the large are wide, they're angled in the direction of the trend. And here's one of those potential tails, or there's one of those tails. That's a potential entry. And I'm just going to get in the habit of doing this, guys. This is how you're going to learn to trade these rules. Take everything off your chart except momentum. And when you see these tails, put a circle on it. If I scroll back, they're still inside. I'm not going to circle that one. And you'll notice that there's indecision sometimes where they don't agree, or maybe they don't agree with the background color. Next-gen users learn to sit on their hands because the advantage isn't there. But if I scroll back into yesterday, once again, I see this odds favorable momentum, and I'm circling these tails. And I know that the first piece of the puzzle is in place. And then once I have the advantage of momentum, the next thing I have to do is I have to make sure that I have a clear path. And I make sure that I have a clear path by saying that termination conditions are false. I have not reached an area where the market is likely to stop or it may reverse. And the areas that may reverse the market are red Fibonacci resistance, blue Fibonacci support, these yellow 1-to-1s. It can also be a divergence high, that magenta line that prints from a pivot where it's losing momentum, or a divergence low, that cyan line that prints from a pivot when the market is losing momentum. We're going to use these areas, and we're just going to do a simple comparison to determine whether or not we've reached a termination condition, an area that may reverse the market. And it's a two-part process, guys, and I want you to embrace the simplicity. The first part is that price reaches the area, meaning that these dynamic Renko bars come down and reach support. Red bars all the way down right into that big blue Fibonacci line. When price reaches an area, all you have to do is ask yourself, where are the trigger lines? And if the trigger lines are above support, don't take any more trend trade short. How easy is that? Price reaches, no triggers through, don't take the trade. Guys, that is your termination condition. This is letting you know that you no longer have a clear path. You have a clear path when both small and large triggers are on the other side of fibs, right? We've cleared the path through. Small and large broke support. Support now acts as resistance. There's nothing in the way between me and this blue fib. There's one of those tails, right? There's odds favorable momentum. The path is clear. There's a potential entry where the market is likely to continue from our chart reading and where the market is likely to go with all that momentum, that Fibonacci off in the distance. And this would have been an outstanding trade. And we're going to teach you how to recognize it. When the market creates a pivot from down to up or up to down, and there's a loss of momentum, it's calculated in the background. Your software does it for you. You don't have to compare MACBBs to price and do all these different graphic things. It's literally going to print a cyan line. That cyan line won't print until about the third bar. There's a calculation in there. So the pivot's going to form and you're not going to see that divergence. But right about here, that line is going to print. So these cyan lines coming off of the pivot are not termination conditions. It's just a visual representation of the loss of momentum. It's when price, these dynamic Renko price bars come back and reach the area. Price reaches the area. All of my trigger lines remain above. Well, now I have a termination condition. Now I have an area that may reverse the market. Now I have that giant red flag waving saying, hey, Mark, just be patient. Let's wait and see if it breaks. Let's see if all the trigger lines get to the other side of it. Or let's see if it reverses the market. And if it does reverse the market, well, now I have what's called a strong bottom. A termination condition from a low that reverses the market is a strong bottom. These pivot stop outs of a divergence low, of a divergence high are very powerful. They become even more powerful when they coincide with Fibonacci resistance or support. I'm going to use the term in the classroom, strong top or strong bottom, for a termination that creates a full reversal. I'm not going to weigh them out, strong top 1, stronger top 2, or anything like that. We're just going to call it a strong top if it reverses the market. That's it. If my large triggers go from green to red or red to green, if I get that odds favorable momentum, there's one of those tails of potential entry. This picture is your reminder that 90% of what you're going to do during the day is reading your indicators. Because as these dynamic Renko bars work their way up all the way to resistance, none of my triggers break through, and this is a big waving red flag. Mark, no more long trades because it may reverse the market. Well, it does create an untradeable bounce. Remember, I told you that these institutional traders react to Fibonacci, and it pushes all the way back down to Fibonacci support, at which point absolutely none of my trigger lines break through. I'm in this point where I'm looking at a little consolidation. I'm looking at a fight between buyers and sellers. My large triggers have an inability to follow along. They remain a full bar away as price reaches this area. I never back off PFI. No mercy. A lot of people like to give it 5 minutes to sort out. I'm always teaching the class, so I never worry about the open. No, I'm talking to you guys during the open. I never get the open. But I do know that there's a lot of traders that prefer to let things kind of sort out, because there may be people right there at 9:30 that have just been sitting on their hands waiting to make a decision. So how's that for a non-committal answer? There's a lot of people probably in this room that prefer not to trade that first 5 minutes, just to let everything sort out. Sometimes it's advantageous. Sometimes it wouldn't have mattered one way or the other. So watch that open for a week and see if it's tradable. If it is, and your rules are met, rock star. And if not, yeah, then just relax for a minute, right? What a great time to go grab a cup of coffee. Guys, from support, price comes all the way back up to resistance. Look at the consolidation. Fibonacci will help you recognize consolidation and keep you from getting beat up inside of it. It reaches resistance, a divergence high, and a second resistance. Now we have a pivot stop out of a divergence high. It coincides with Fibonacci. It adds power to the top, guys. And when this termination creates a full reversal, gives me odds favorable momentum in a rules met trade, guys, that's your best of the best. That's that strong top. That's that precursor for your highest probability trend trade. So pretty simple. We'll do it one more time. Price reaches the area. If none of the trigger lines break through this area, sit on your hands, wait. It's either going to break, or it's going to reverse, or it's just going to dance around like it did here, which creates an untradeable scenario. And if this termination creates a full reversal, large go from red to green, smalls get above the large, absolutely GWC. And notice how we have a clear path. Both small and large have broken above resistance. It begins to act as support. We haven't reached any of those areas. And there's one of those potential entries, guys. There's your highest probability trend trade. There's that trade that typically wins 70 to 80% of the time. There's your foundational trade. That's the trade that's going to teach you to be the chart reader. Because as you look for those advantages, you're going to understand momentum. And when you understand momentum, you get a very clear idea of where that market is likely to go with that momentum. And then when you understand momentum in a clear path, understanding when it may reverse the market, you've got 2/3 of the puzzle already taken care of, right? So focus on the easy. There's termination, creates a full reversal. We're going to call it a strong bottom. A strong bottom doesn't guarantee a win, but a strong bottom with odds favorable momentum and a clear path is the beginning of the recipe for your highest chance of success. Sometimes on the large chart, the market turns from nowhere. The market seems to just do a 180 without any warning at all. You may have a clear path to the downside. You may have odds favorable momentum and a clear path to the upside. I'm going to give you one more termination condition, guys. And this is the only termination condition that I give any credit at all on a smaller, faster chart. And that's 3 divergences in the same location. You remember that 3 divergences let me know that the market has lost momentum at a pivot 3 times. I see it with these cyan lines. These 3 divergences, being able to recognize them in the moment, is going to help you avoid taking that last short trade that has a very low chance of winning because it's into a termination condition. There is no clear path. But it's also going to give you an advantage as you learn to manage these trades. If I'm in the perfect trade and 3 divergences print, that's a cue for me to exit the trade, to get out of there, to preserve my equity, right? And I've found that being able to avoid the unnecessary losers is one of the great ways to retain the capital from the best trades. So 3 divergences at a low may terminate that push down. It becomes more powerful when those small triggers go from odds favorable to anything can happen, and it becomes even more powerful still when that 3rd divergence is higher than the previous. It gives us a head and shoulders pattern, and it just adds a little weight to the bottom, to that termination condition. From a high, the same thing. 3 divergences on its own is a great termination condition. 3 divergences with weak trigger lines is even better, and 3 divergences when that final pivot is lower than the high is even stronger. It's that head and shoulders pattern. And guys, you're going to see these 3 divergences, and I'm going to drop this in the room. Every picture I put in the room, please steal. Put it in your spreadsheet. And then GWC, did you see where I dropped that into the room for you? I put a copy of mine in there. Guys, my copy has over 250 pictures of rules-based entries. It has a lot of notes on management. It has a lot of notes on patterns. Please feel free to steal that. You'll see this look from a low or this look from a high when your large chart is changing and you can't see it yet because it's such a slow chart. So these are termination conditions, guys. Price reaches an area. Nothing breaks through. No trigger lines break through. We're not going to trade into that area. And it's really pretty simple. And I'm going to give you guys two pictures in the room right now. I'm going to give you a picture of termination conditions at a high with the rules written out and a visual of those rules being met. And you're going to see the pictures of termination conditions at a low. Also with the rules written out and visually what they look like, because I believe that a lot of people are visual learners. And now what I want to do is I want to go back to that same live market where we circled all those tails with the odds favorable momentum. And let's put our Fibonacci areas on there. Let's put those areas that may stop the market. And we're going to look for these rules to be met. We're going to look for that price reaches an area, no trigger lines go through. And here we see it right at the top, and it stops the market in its tracks. And here we see it at the bottom, and it stops the market in its tracks. And look at this, 1, 2, 3 divergences from a low, and that was our push up to the next key area. Here with that odds favorable momentum with those tails, we have a couple areas with the potential to break but haven't broken yet. And the reality is, guys, so far the S&P hasn't been providing an awful lot of opportunities yet. Directly into a divergence low, no trigger lines break through. Guys, look how it pushes up all the way to resistance, and it retests. Rule number 2 can keep you patient. Rule number 2 can keep you from trading into areas that you hope break. Here the momentum was up. It was odds favorable. The trend was up. But because we reached an area no trigger lines break through, we notice it in our hands. And when this termination creates a full reversal, it's now a strong top. And when that full reversal gives me this much momentum, as we approach Fibonacci support, this area has the potential to break. And that takes me to my final lesson on termination conditions. It was yesterday, Debbie, and then it got better, and I think it's a Discord issue. Let me shut it down and pull it back up, and I've got all my settings on the full giddy up. Here's the reboot. Is that any better? After a little reboot yesterday, it made it better for people. I hope that helped. So when we're talking about termination conditions, guys, this is the easiest way to do it. Keep it simple initially. Awesome. Thanks, Lady P. You're welcome, Debbie. Yeah, guys, always let me know. If price reaches an area and absolutely no trigger lines break through, we don't have a clear path. Rule number 2 isn't met. Then we're at a termination condition. We have to sit on our hands and we have to wait and see what happens. If both the small and the large triggers exceed that 69.80, resistance acts as support, we now have a clear path. Notice there's odds favorable momentum in one of those tails. Guys, this is your best of the best look. And for the brand new user for 20 days, it's okay to leave it either clear path or no clear path. And really that's simple, right? Because we're learning to read our charts. We're learning to process this information rapidly. And it takes some repetition to do that. There's also going to be an instance where that odds favorable momentum can break through an area. If areas always held, the market would be stuck between two fibs for eternity, right? Sometimes areas break, and areas break with that odds favorable momentum with rule number 1 in place. So when price reaches this area and none of the trigger lines break through, I'm going to sit on my hands and I'm going to wait for the reaction from the Fibonacci area. If my small triggers get above this area of resistance, and guys, not just a little peak, if my small triggers smash through that area and start getting above it, and my large triggers don't, well, now I have 50% of my trigger lines through the area, and I have 50% that are not, both lines of the triggers. This is what we lovingly refer to as a 50-50 look, guys. And the 50-50 look means that this area has the potential to break with all that momentum. However, it's not broken yet, so it's not a clear path. So rule number 2, by the simple recipe, has not been met, which means that this can no longer be considered a high probability trade. And if a high probability trend trade has the potential to win 70 to 80% of the time, when you deviate, when you jump ship from that high probability scenario, you have to expect your win percentage to decrease as well, right? So this is a potential trade for new users. This is a potential trade. When you forfeit the clear path, guys, it's imperative that you don't forfeit momentum. And it's imperative that you don't forfeit the perfect entry on your smaller, faster chart. Don't give away the other 2 advantages if you're going to give away this one. And guys, these 50-50 trades take time to develop an understanding. These 50-50 trades, I'm going to give you the easiest, highest probability way to take them initially. I haven't, K-Dog, because there's too many variables. And this is why when I talk about 50-50 trades, I mention just let it be perfect initially, right? Let it be the best of the best look. Let it be where you don't sacrifice momentum on the smaller chart. Let it be where you have strong triggers and where your window of opportunity is the smallest, right? So we can reduce that risk a little bit because there's a lot of variables, K-Dog. Where's that market coming from, right? That's one of the variables. Is it coming from a strong top or bottom? And then another variable is, do I have any divergences on my smaller chart? What's my trigger look on my smaller chart? Are my small triggers well through the area? Or are they just barely breaking through and it might be a little bit of overrun? These are things that you have to consider. Are my large triggers trying to get through just one area, or are they trying to get through 2, 3, 4 areas? Right? And how much do I trust momentum to get through 4 areas compared to just one? So there's variables as you grow with the medium probability trade, with this 50-50 trade, guys. And I'm telling you right now, I'm going to give you the plan to keep you on the safer side, the safest side that I know how to provide you. And while you embrace that plan, you're going to begin to recognize all these patterns. You're going to begin to see these variables in an instant. And it's going to change your trading, and it's going to change your trading plan. But in the beginning, let's focus on either broken or not broken, 20 days of finding perfect entries. And then we'll incorporate the potential to break. Because look down here, guys. Even with that odds favorable momentum, with the small smashing through, this market, this trade, this potential entry right here had to be managed out of. The area ultimately doesn't break and the market goes the other direction. And then here, that exact same look provides a winner. So when we talk about entries for the medium probability trade, when we talk about that 50-50 trade entry, we're going to talk about exactly what the perfect entry looks like that doesn't sacrifice the entry area, that doesn't sacrifice the momentum. But first, we've got to be able to find the entry for the highest probability trend trade, that point where the market is likely to continue. And when the rules are met on your large chart, when those advantages are in place, momentum and a clear path, this should be the look on your small chart. We're in an uptrend. My small triggers are well above the large triggers. The large triggers are wide. They're angled in the direction of the trend. And the synthetic triggers on my small chart, Paul, the calendars all said the 23rd rather than the 17th. I don't know what the reasoning is behind it, but I tried to change it in 7 today, and I don't even have an option to roll that contract yet. You're welcome. And then NinjaTrader 8 didn't flash up that message, hey, it's time to roll. Rule number 3, your rule for entry that happens on that that smaller, faster chart that happens on that refinement chart. Rule number 3 says that we're going to use a limit order to buy or sell a pullback. And a pullback is this tiny little push down that's counter to that giant push up. It's counter to the direction, it's counter to the momentum, it's counter to the clear path. It's this tiny little push down. And rule number 3 says, I'm going to use a limit order to buy or sell a pullback at an area. And my areas are fibs, mid bands, or yellow 1-to-1s. And I want those areas to be inside of favorable large triggers. I want those areas to be enveloped inside of this large and synthetic, one on top of the other. And this creates my smallest bounce point, my smallest continuation point, my smallest window of opportunity. So while everything is going up, while everything is strong, when my triggers are overlapping, I've made the decision because of my large chart, it's time to look for an entry. It's time to enter the trade because of those advantages. I'm identifying areas, fibs, mid bands, yellow 1-to-1s, and my large and synthetic triggers are coming up like a shark about to breach. This is a moving average, and these moving averages will be working their way up. So if an area is a tick or two above it in the moment, it's probably going to get swallowed up by it by the time that retracement happens. Your retracement begins with a reversal bar. When everything says up, we're going to wait for a reversal bar. The reversal bar is not your entry. The reversal bar is what's going to have you creating your window of opportunity. For a long trade, your window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. For a short trade, when you're selling the market, your window of opportunity is going to extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. So I'm going to identify my areas. I'm going to identify my favorable large triggers. And one of two things are going to happen, guys. Either the market's going to pull back to me. It's going to come right back to that area inside of favorable large triggers. And at this point, I'm in the market. I'm in the market with the advantage of momentum. I'm in the market with the advantage of a clear path. And I'm in the market with the advantage of having entered at the area where the market is most likely to continue. When this reversal bar prints, I'm going to look at my large triggers from the top of my large triggers to the bottom of my large triggers, guys. And this is going to be where I'm going to look for my areas. And my areas will extend for a long trade from the highest point of support to the lowest point of support inside of those favorable large triggers. So it's a refinement process. I know that it needs to be inside of the triggers, but high probability trend trades come from areas. They provide a bounce point, like throwing a tennis ball up against the wall. So the market comes down and my limit order is at the top of that window, right above support inside of favorable large triggers. This becomes the point where the market is likely to continue. But the window, in this case, is about 11 ticks wide. So mentally, I'm prepared that that market may go down to the bottom of the window. It may go through the midband. It might even break through support, and it may come all the way down to those 1-to-1s, and that's still inside of the window of opportunity. It's still a rules-based trade, and there's no reason for me to panic about watching my P&L go against me a couple ticks. Some new users try to beat the system, and they put their limit order down here at the very bottom. They're saying, well, I can't watch it go against me, so I'm just going to get in at the bottom. But remember, the momentum on the large chart is screaming to the upside. The path is absolutely clear on the upside. We're going to take our entry at the top so we don't miss that little push. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, I'm going to put my stop well outside of that window. Typically for futures trading, it's going to be 12 to 14 ticks. And I'm going to keep my initial stop, that 12 to 14 ticks, in place until I get a reversal bar. And I'm going to be okay losing $120 if this market pushes beyond that window of opportunity. Small losses are an acceptable part of a positive equity curve. This is your look. This is your entry, guys. This is your absolute best of the best. And I never miss this trade. I never miss this high probability trend trade. I'm committed 100% to taking it because when I follow the rules and the advantages are in place, 70 to 80% of the time, this is my result. Profit target reached, right? And when I get a reversal bar in the direction of the trade, I'm going to reduce my risk below that reversal bar, guys. Because I waited for the market to reach support, my risk is reduced. Because I waited for the pullback and gave it that bounce point, my profit potential has increased. This is your refinement process. Because what happens in only one bar on that 13.2, on that larger chart, happens on typically 15 to 30 bars on that smaller, faster chart. And that's how we're able to refine down to that best of the best spot to get into these trades. I want you guys to focus on simplicity. I want you to allow it to be easy. 3 simple rules providing 3 advantages. And let's recognize them until we're so good at it that we can do it in a matter of seconds on just 2 charts. And if we go back to that S&P, odds favorable momentum. We're at the tail end of it, right? All of my trigger lines have broken above my area of resistance. It's now behaving as an area of support. And I have one area of support inside of favorable large triggers, guys. I have one area of support inside of favorable large triggers. And this becomes my entry. This becomes the point where the market is most likely to bounce. It's not guaranteed to get there, right? It's not guaranteed to win, but this statistical advantage, this divergence low that the large triggers didn't break through, gives us one of those pivot stop outs, creates odds favorable momentum. There's nothing in my way. All of my trigger lines are above the area, and I had one line inside of favorable large triggers, and dag nabbit, they didn't come get me. I only had 2 divergences. So guys, that's it. We just watched it live in the moment. Your job is to scroll back and look for those opportunities that may have been entries. So let's go back to 5:42 a.m., guys. Some of you were awake, some of you weren't. And our first circle pulls back to a mid-band, but that mid-band isn't inside of favorable large triggers. Unfortunately, that's not rules met. This second one, price reached Fibonacci support, and the trigger lines hadn't even broken through. That one's not rules met. What a pain in the ass. And then that final circle is that pullback right to resistance inside of favorable large triggers. But it's a little weak and there's divergences, and 90% of you aren't going to take this trade. And that's okay. It reached Fibonacci resistance, right, PFI? It did everything. Oh, it did. Do we have different charts? It did everything we expect it to do, right? It just didn't give us an entry. And unfortunately, that wasn't our money. In PFI, I'm going to show you something. And guys, this is for everybody. This is the technical thing. Of how fibs are made. When you open your software, your software is reading every pivot. And guys, I mean every pivot, every up, every down, every swing, and it's measuring them. It's creating Fibonacci retracements, projections, and all of those lines look like this. Those of you that are my age remember Yar's Revenge on Atari 2600. This is Yar's Revenge. But look at all of these lines. And then the magic of Nexgen's automated Fibonacci areas depend on 2 things. Which lines are the most important? All the algorithm John Novak created. And then which prices have the highest concentration of the most important Fibonacci levels? All of these calculations give you these beautiful red and blue lines. Big O, it didn't get to me. So let's do it together. You ready? Let's do it together. Smalls are outside of the large. That's the first thing that we look for, right, guys? So big O, odds favorable momentum. Are you comfortable with it? That's our best look, isn't it? So rule number 1 has been met. You're not comfortable with it? No worries. Let's fix that. And it's really a very simple. It's a very simple look. If there is separation between the large and the small triggers, Big O, from the point where they accelerate away until the point where they return, this is our odds favorable momentum. This means that the market is likely to continue in the direction of the trend. When the small triggers return and get inside of the large triggers, we lose that advantage, and we call those weakened triggers, and really anything can happen up or down. So when we talk about rule number 1, we talk about that odds favorable momentum. What you're going to find is that it'll be present and then it'll go away to that anything can happen look. And this typically precedes a reversal in the market. And then it'll be present and then it'll go away and there's that reversal again and then it'll be present. And sometimes they won't agree at all. Sometimes the large will be up and the small will be down, and sometimes the background will be green but the triggers are red. And this is where those guys are fighting it out. The buyers, nope, has nothing to do with candlesticks. Has nothing to do with candlesticks. Momentum is nothing more than the separation between the large and the small. That's it. So if we go back here, there's daylight between the small and the large, and you can see where they accelerated away. They're working their way back, but I still have that separation. So this right here is when my momentum is its absolute strongest. This is when I have the best chance of success. This is when the market is likely to continue in the direction of the trend. Does that help a little bit? I don't have any reference to the candlesticks. Price bars mean nothing to me. I'm only going to use these large and small triggers. How I will use price bars is I want to make sure that they haven't reached this area of resistance. I want to make sure that they haven't come up and reached Fibonacci resistance, because at that point, rule number 2 is not met. Rule number 2, saying that I have to have a clear path, would not be in place because we reached our target. This red fib, Big O, is going to become a target for us until price reaches it. Does that make sense? And this isn't just for Big O, this is for everybody. This is how my brain works. And mine does it in a matter of seconds now. Yours will too. The background is green, so I'm looking for longs. There's separation between the small and large, therefore my momentum is in place, and price hasn't reached an area, so I know I have a clear path because both of my trigger lines are above that area of resistance. This is 100% the best of the best, Big O. And you're going to be able to recognize this through repetition, over and over. I don't ever jump in, so watch this. Because you can't see the tails? Is that what you're saying? Are you ready for the magic? I love it when people ask this question. This is where the smaller, faster chart comes in. This is the best questions. Thank you so much for these questions. Because this is going to be clarity for a lot of people, I think. When the rules are met on the large chart, when the lines that separate, can you take a picture of your chart and show me which lines you're referring to? The lines that separate, these two lines, the small and the large. And I don't ever jump in. I wait for the market to come to me. Are you comfortable taking pictures, Big O? I think this is an important lesson. Did I lose you? Guys, I don't ever want to lose you. My advantage of momentum comes on the large chart. My advantage of the clear path. And I'm not sure which lines you're talking about that separate. And guys, I hate to admit this, sometimes I need a little clarity as well. Sometimes I need a little help so that I can give you the best information. You should be able to see these clearly. Small triggers. And watch this. I'll draw a line in between the two. That's the gap between the two. So in the moment, and let's look at the live chart just to make sure. Let me pull up a different market. In the moment, it looks like this. There's that separation between the small and the large. But we are in a termination condition here. So do you see how it looks in the moment, Big O? I can see that separation between the two. I know that I've got advantageous momentum, but this one happens to be right into one of those potential termination conditions. So I have to wait. Is it going to hold or is it going to break? So in the moment, that's what that momentum is going to look like. Does that help a little bit seeing it live? We've just kind of stopped it for the sake of the lesson. They're in the middle of the screen, but not in the moment. Okay, so let's do it again. They are always, if you can't see them for some reason, if you can't see them moving, Big O, this is your live bar. See how the black highlighted? This is exactly what it looks like. When you're looking at the live market, this is the most current price. So I can see that separation right in the moment, right? What we're doing for the sake of this entry lesson is I've backtracked, is I've gone back so that we can study this look historically. Does that make sense? And I'm going to fully reserve my right to not be understanding the question. If that's the case, I do apologize. So here it is, back testing. Take care, Wells. There they are in the moment. No separation between the two. There they are in the moment. We've lost that separation between the two. It looks like this termination condition's holding for the moment. 1, 2, 3 divergences kind of confirm it. But this one, Big O, I backtracked it so that we could look at it and talk about entries, understanding where this is most likely to happen, understanding where these tails are most likely to form. And we do that on the small chart. When I have momentum, when there's nothing in the way, on my small chart, all I need to do, whoops, I went too far, is I'm waiting for this reversal bar. I'm waiting for this down bar on a smaller, faster chart. And this down bar signals the beginning of that pullback, that small retracement that's counter to this trend, that's counter to this momentum, that's counter to this clear path. So at the time of this reversal bar, if I draw a box from the top of my triggers to the bottom of my triggers, I can identify my highest point of support, which happens to be Fibonacci support, and my lowest form of support, which happens to be these yellow 1-to-1s, and there's all the support within them. This becomes my window of opportunity. This becomes the place where the market is most likely to continue from, so that I can take that entry for my high probability trend trade, so that I can anticipate where that tail, where that wick may form. And what we're going to do is we're just going to activate a limit order right at the top of that window, a tick or two above support. And at this point, Big O, all we can do is wait. Is the market going to reach our order? Because that's where it's most likely to bounce. Oop, it didn't make it yet, but my window hasn't changed. Notice how my window moves a little bit, right? Now, It's that midband, and that midband becomes the only area left inside of those favorable large triggers. My limit order is going to go just above it. I'm going to have to adjust. And then unfortunately, Big O, this one decided not to get us, and it decided to go all the way to that Fibonacci resistance without reaching our limit order. But what we do on the smaller, faster chart is we can anticipate where these tails are likely to happen by using that area of support inside of favorable large triggers, or by using the area of resistance inside of favorable large triggers. So when those rules are met on the large chart, we're going to wait for the reversal bar. When we get the reversal bar, we're going to look from the bottom of the triggers to the top of the triggers, and we're going to look for those areas that fall within. In this case, it's only one line, just that midband. This spot right here is where that tail is most likely to form on a large chart. But because we can't just anticipate from a large chart, we use these areas inside of favorable large triggers to define where that tail is most likely to happen. And then what we just did together was how you can go back and study this. Just scroll back on your large chart, and if you see odds favorable and you see no termination conditions, circle a tail. And if it lines up with an area inside of favorable large triggers, well, now you know that you have a high probability trend trade. Now you know that you have that best of the best. Now you know that the rules are met. And guys, this is what I encourage new users to do, especially you guys that are working on your entries, is if I scroll back on the S&P, you know what? Crude oil had the best example this morning. Well, we can do it in the moment. Termination creates a full reversal. Full reversal gives me odds favorable momentum. Odds favorable momentum. This is it in the moment. There's my reversal bar coming up. Can I identify my lowest point of resistance to my highest point of resistance inside a favorable large trigger? This becomes the point where the market is most likely to bounce, and I put a limit order just below it. Big O, do you notice how I don't have a tail on my large chart? What I'm doing is I'm anticipating where that tail is likely to form in the event that I get a pullback. Does that make sense, everybody? This isn't live in the market. Termination creates a full reversal. Full reversal gives me odds favorable. Odds favorable has me in one of those 50-50 scenarios. 80-86 has the potential to break because of this momentum. It has the potential to break because of this great top. And I have the potential to take advantage of that if it gives me a pullback to an area of resistance inside of favorable large triggers. Big O, does that help a little bit in the moment? And then my rules say, as a brand new user, that if divergence prints, if I get a loss of momentum on this chart, I'm going to cancel this order. But there is no divergence. My midband is still my lowest point of resistance. Here comes that potential pullback, right? Right here, my small triggers are through. My large triggers are not. It's a 50-50 trade, PFI. 50% of my triggers are through. 50% of my triggers are not, which means that I want strong triggers, which I have. It means I want no divergence, which I have. And it means that I want a relatively small window of opportunity. I don't want to put 20 ticks of risk on a medium probability trade. This is a 50-50 trade setting up in the moment, ladies and gentlemen. The entry point is exactly the same. It's at the area inside of favorable large triggers. The stop placement is exactly the same at an area inside of favorable large triggers. Guys, the goal for each and every one of you in the first 20 days is to ask a million questions. Big O, please keep asking these questions because you're going to get clarity every time you do. I'm going to give you guys a high probability trend trade checklist. Is the market coming from a good top or bottom? Guys, there's a video associated and attached to the checklist to help you really get comfortable with that concept. If I mark yes, and I don't have to, Without a good top or bottom, if all the rules are met, it can still be a great trade. I'm going to look for odds favorable momentum. And if I have it, if I mark yes, I'm going to make sure that there's no termination conditions on the large chart. And if there are none, well, then I'm going to look for that area inside of favorable large triggers. Guys, I have never in the history of this checklist had anyone do worse than 70% winners. Most users are in that 80 to 90% win. And then I'm going to give you the exact same checklist. But this time, guys, what I'm going to do is I'm attaching pictures from the user guide. What does it mean to have a good top or bottom? How do I identify strong triggers? Is there an easy way to know whether or not there's a termination condition? And here's that window of opportunity, talking about the reversal bar, the areas inside, the areas that aren't inside, and exactly where your order goes. Guys, this is your basic. This is 20 days to chart reading, 20 days to recognizing advantages. So PFI, it never came and got me, did it? But I still have odds favorable momentum. Ziba, I don't really have an NQ checklist. I have my personal one I'll be glad to share with you. But I don't own an NQ checklist. Now I have a clear path, PFI. Right? Now all of my trigger lines are below the area of resistance. Now my only window of opportunity, look at this, from the bottom of the triggers to the top of the triggers, from the lowest point of resistance to the highest point of resistance. Are the rules still met? Strong triggers, no termination conditions, right? Everything has gone through support. It's now behaving as resistance. I haven't reached an area below me. Guys, I put my limit order just below that window of opportunity. Below that window because of the momentum. And if the market comes back and reaches this limit order, guys, I'm in a trade that typically wins 70 to 80% of the time. It's not guaranteed to win. But what I've done is I've given myself a statistical advantage. I've given myself the large chart advantage of momentum and a clear path, and the small chart advantage of an entry where it's most likely to continue. And now there's nothing for me to do. I've got a target at 100. I've got a target at 200. My initial stop outside of that window. Give it some room, right? I can use this reversal bar marker on the large chart. That's pretty acceptable. If I get a reversal bar on my small chart, if I get a reversal bar in the direction of the trade, I'm going to reduce my risk to 2 ticks above that bar. Guys, the only thing I want you guys to focus on for your first 20 days is being comfortable selling the market as it's coming up to you. First target reached, reversal bar printed. I'm now break even on the trade. Nothing for me to do. It's either going to reach my second target of $200 or it's going to get me break even. Guys, you're watching a high probability trend trade happen live in front of you. I've already made $100. I have $100 in the bank. They can't take that from me. I have zero risk on the trade. And the market is still doing exactly what the large chart suggests that it may do. And I'm not getting caught up on fluctuations, guys. It either gets me break even or it goes to my second target. These are my only options. PFI, what direction are the small triggers facing on the small chart? They're starting to turn. I still have the advantage of these, right? They're turning red. Large chart still says momentum. Large chart still says down. Guys, they can get me break even. I don't care. I'm already $100 up. That's 2 divergences, but 2 divergences doesn't kill a trend on a small chart, right? It takes 3. So if a third divergence prints, yeah, I'm out of it. But I'm still sitting and I'm waiting and I'm trusting the large chart. It's out of my control, guys. The only thing that I can control is whether or not my rules are met. And my rules were met 100% right here. My first target was easy to hit with all of these advantages, and it may come get me break even. This loss of momentum might push me all the way up to my previous entry, or it may push me to an area of resistance inside of favorable large triggers. See how that happened? Odds favorable, no termination, area of resistance inside of favorable large triggers, and now if I get a reversal bar off of this one, I'm going to reduce my risk even more behind that reversal bar. Otherwise, it's going to get me break even. Everything that I do is if-then. Everything is pragmatic. Everything is calculated. Everything is planned out. I have a plan every time I pull the trigger. My job isn't to hope, to pray, to wish. My job is to simply do. Nothing's changed yet. I still have odds favorable momentum. I still don't have termination conditions. I took the perfect entry, the first entry, inside of favorable large triggers. I took quick profits. Guys, the serotonin is flowing in me. And I have absolutely nothing to lose. It either hits the second target or it doesn't, guys. I don't care. But if I put this trade up against this checklist, it's all yeses. 100%, guys. And I wonder if resistance inside of favorable large triggers will hold it. It may not. There we go. Out break even, guys. I made $100. I made $100. If I do that 3 times a day, that's a $1,500 week, guys. That's a $6,000 month. That's a $72,000 year on a 2-lot. And it's pragmatic, and it's mechanical, and there's no emotion. And guys, I would take this trade every time. And the cool part is as you grow with the software, as you learn to read your indicators, you're not going to jump ship, or you're not going to reduce your risk, because this is still an area inside of favorable large triggers. Guys, this entry is every bit as valid as that entry. And if you were in at 83, you took your $100 again. You double dipped. So now you're up $200. And if a divergence prints, well, it'll take you out, right? And if it doesn't, it'll go to that target. And I see this a lot with experienced traders. Doesn't matter, does it, Paul? How many divergences on a small chart kill a trend? How many divergences? 3. 2 doesn't scare me because I have odds favorable momentum, because I have no termination conditions. And guys, this is what I want you to understand. The large chart leads the way. There's only one termination condition that I respect on a small chart, and that is 3 divergences. So until I get 3 divergences, this is still a valid entry. Give me a Y if that makes sense. Lady P, you said the light's coming on, right? The large chart leads the way, ladies and gentlemen. The large chart gives the advantage of momentum. The large chart gives the advantage of a clear path. This is nothing more than a small chart. That's your perfect entry. That's your management if you're pragmatic. Once you learn to read your indicators, guys, there's no way in hell you move your stop to break even there, because the large chart still says down. And then if this divergence prints, you may get out. Guys, I'm going to give you a plan. This is the KISS plan, the Keep It Simple Silly plan, the Keep It Simple Sunshine plan. This is a plan for you, ladies and gentlemen, to embrace, to make your baby until you can read your charts in the moment, until the idea solidifies that the large chart leads the way, until the idea solidifies that 3 divergences on the small chart is the only termination condition that you respect, And guys, that was your $200 profit before you ever get to Fibonacci support. But it made it to Fibonacci support. This is what I teach every day, ladies and gentlemen. This is Nexgen. This is what we do. Being able to identify where that tail is most likely to happen. Big O, did that kind of put it together for you in a live scenario? We don't trade the tail. We trade the area of resistance inside of favorable large triggers. Guys, brand new users got out with $100. Experienced users took it to the Fibonacci. Really experienced users probably added on their position right here. So I want to talk about this plan that I'm going to give you guys, the KISS trading plan. Simple plan for consistency. Notice that I say simple. I don't want you guys overthinking things. There's a lot to process when you're learning to read your indicators. Never fight the large chart direction. Never fight the large chart triggers. Guys, that is a recipe for death, right? For absolute death in the market. All you're doing for 20 days is defining your entry point. Why do we do that? Because great entries create manageable trades. Write that down, stitch it into a pillow. Great entries create manageable trades. Guys, this is your entry. This is your best of the best. This is your highest probability. And this takes up a third of a sheet of paper, a quarter of a sheet of paper. The entries will become easy for you. The entries will become methodical, mechanical. There will be no emotion. And this comes from study, guys, repetitions. You will be able to recognize a high probability trend trade entry in a matter of seconds. Within 10 seconds, you'll be able to have that entry. Every trade requires management. Every great entry requires management. And guys, what you saw was me talking through the most pragmatic. Don't waste your energy being upset. You're still learning the plan, PFI, and if you don't screw it up, it's not going to solidify these lessons, right? Get in there and make mistakes. This looks familiar. We took our entry at resistance inside of favorable large triggers. My initial stop, 12 to 14 ticks outside of that window of opportunity. And we knew that it was either going to stop us out or it was going to give us a reversal bar. And if it gave us the reversal bar, you saw how I reduced my risk. And then it only had two options. It either hit the target or we got stopped out. In our case, it hit the target. This is on your spreadsheet, guys. This is on your KISS plan. And then brand new users, you're never going to move that stop again because you're learning to trust the large chart right now. You're going to go break even so that there's no risk. You've pocketed that $100 and you're either going to hit your second target or you're going to get stopped out break even. Guys, we got stopped out break even, didn't we? Is anyone upset about $100 in their pocket for 3 minutes worth of work? Did you hear how calm I was as we went through that process? And then it comes one tick from support, guys. One tick. That's your exit. That's your $200. You got paid. You're up $300. Pragmatic. It begins with odds favorable and a clear path. Guys, I'll take this trade every time. I want you to take this trade every time. I want you to get great at that entry. And I want you to practice your management. And if you screw up your management, PFI, I want you to go back and annotate your chart how you could have done it. Paul, I get away from the plan at least once a week. At least once a week. Because I'm so damn smart. But what I've found is that I trust the plan so much that when I recognize myself getting sideways, I do exactly what you said. I take a deep breath, right? And I ask myself, am I chasing too much? So some people I see in this room, they do great with simplicity. They hit their goals with simplicity. They get all these simple lessons. And then once that solid plan comes in and begins yielding results, 99 out of 99 humans forget that the plan was what created the results. Forget that the plan was what was bringing them success. Forget that the plan let them manage the best of the best entries and gave them a pragmatic approach to management. And guys, your management plan will grow exponentially as you learn to read your charts a little more, as you learn to process all these things in the moment. But this plan, if you followed it, put $100 in your pocket. The money is there. All you have to do is learn how to find it, how to wait for it. That's a weak top. And it goes all the way to support. And when it goes all the way to support, guys, support has no chance of holding here. None of the triggers are close. The large triggers don't follow. And from a bad top, when I reach a mid-band and support, I'm expecting this market to find this fib. As you grow at the software, a lot of you got long at 29.25 when everything agreed once again, and you just got paid to the fib. New users, you're not here yet. Not yet, but you will be soon if you do the study, if you keep it simple. And Paul, your point is a beautiful point. What you're going to do, guys, is you're going to embrace this plan. And when I was training managers out in the real world, not the trading world, the most common occurrence was managers were brilliant for the first 30 days. Managers were exceptional for the first 30 days because I gave them a checklist that kept them safe. The same way I'm giving you a checklist that keeps you safe. And what's going to happen, and what happened to these managers, whoa, that's just a little small. What happened to those managers is they would follow this to the letter. And they thought they were the smartest people ever. But 30 days doesn't build solid routines and habits and something that requires this sort of attention. So then they started breaking outside of it. Guys, you're going to break outside of the plan. You're going to stop dancing with the one that brung you, as Ron said. And you're going to start losing. And that's okay, because you're still on simulator. And you're going to start making mistakes outside of the plan, because you're learning to read your charts, right? Has anyone seen Full Metal Jacket when they're running through the mud? And the guy's saying, we are growing outside of their control. We're beginning to make decisions. We are all these things that they turned us into, right? That's what your chart reading does. And you're going to deviate, you're going to make mistakes. And then some of you are going to come right back to simplicity and regain that success. And this is normal for traders. But I want you to know that that's a part of it. And I want you to know that you can circumvent those problems by sticking to the plan initially. Give yourself 20 days on entries. Practice your management, right? So Daryl, you said you got out when the second divergence hit. I say that with odds favorable momentum and no termination conditions, the only thing that's going to pull me out of that trade, the only thing that's going to make me jump ship other than them hitting my stop, is 3 divergences in the same location. Because the rules say that's a termination condition on a small chart. Everything else is just noise, and it doesn't make a difference to me. So guys, embrace the idea that 20 days on a high probability trend trade will give you a boatload of advantages. And then you're down 1,000, you need to make it back quickly. Go pawn your watch, Paul. Go sell your skis. You can't make up for trades that you missed. You can't make up for mistakes that you did, guys. It's one trade at a time, one foot in front of the other. And then all of you guys want to do the 50-50 trade. All of you guys want to take the trade where one area is broken or one area has the potential to break. That 50-50 trade where the small triggers have gone through the area, but the large triggers have not, right? Everybody wants to be a part of this. Everybody wants to take this trade. Guys, that trade is not a high probability trend trade. That trade is a medium probability trend trade. And that medium probability trend trade forfeits the advantage of a clear path. So on this checklist, I have created the safest way to take a 50-50 trade, right? And this is from my study. This is me doing all the hard work for you guys. And it says in order to take a 50-50 with one area not broken, not 3 areas not broken, I need odds favorable momentum on both my large and my small chart. And I need no divergence on my small chart. And I want to see it come from a good top or bottom on my large chart, from a termination that creates a full reversal. And if so, I'm going to enter the area. because all of these give me the best chance of success on a trade where the area hasn't broken yet. And then I put this in there, guys, divergence, no trade. I'm reminding myself that if divergence prints, I'm going to exit the trade. And because it's a medium probability trade, it has to be managed assertively, which means that I'm going to use the same idea for stops. I'm going to use the same idea for reversal bars. But if divergence prints, here it is the third time. If divergence prints, I'm going to exit that trade, guys, as a brand new learning to read my charts user. This is my pragmatic management because it's helping me to stay safe as I learn these patterns. My first contract's at my trouble spot, maybe the fib that I'm expecting to break. And my second contract is that $200 once again. Thank you, Jose. Guys, crude oil inventory is at 10:30. Most of you are going to ignore some of these rules. Most of you are going to say, I'm going to take it anyway. And that's okay. That's all right. Until you have enough repetition, until you've recognized these patterns enough, guys, this is just a safety net for you. This isn't me shackling you to this management. This isn't me shackling you to this management, to this entry criteria. This is me saying, hey, ladies and gentlemen, Big O, Samuel, M, Hamid, Gary, GWC, Jim, Jose, Mark, Ron, Vittorio, Finman, K, Rakesh. This is me telling you that as you learn to read your charts, as you learn to recognize these patterns, this is probably the best way to get into the trade. And then ultimately, you may get the reps in and say, I'll take it with a divergence if I'm coming from a strong top or bottom. That's your next step because of the study that you've done. All the while remembering that it's not a high probability trade and it's not going to win 70 to 80% of the time, most likely. And then you might say, well, I'll still take it if there's two divergence. But I recognize a pattern that pushes me to the bottom of the window and I take a close on the correct side of the triggers and I'm still finding that this is a trade that wins more than it loses from my study, from my repetition. Guys, I will never tell you how to trade. But what I will do is provide you with the highest probability chance of success as you learn to read your indicators. It's up to you to make the decision whether or not you want to follow this plan or whether you prefer to deviate. But I'm telling you, this is a pretty damn good plan. And it's easy to follow and it's pragmatic. And then PFI asks the question, don't you think that it's better to manage the trade like this? Take the first target 100, then move your stop 2 ticks behind the entry. You would have hit the second target and max loss would have been $20. What do you think? Only on high probability trend trade. PFI, I think, where's it at? I think that this is an amazing starting point for your management. I think that this is step 1. In PFI, I think that when you get good at this and keeping it 100% mechanical, so your emotions, so your fears, so your hopes stay out of it, check this out. I can do this. After 100 in profits, I'll keep my stop behind the reversal bar that got me in. Pretty cool, right? And what did we do there? We just changed our plan based on the patterns that we recognize. We just changed our plan based on seeing this happen so many times that we know that there's a way to get more out of it. Does that make sense? And watch this. And now my second contract, at the fib, I expect to hit based on momentum and direction and the clear path. So now what I've done, PFI, is I've turned this simple $300 trade, because of my repetition, because of the time that I've spent keeping it pragmatic so that I could focus on the patterns and not my emotions, it turns into something like this. There's my perfect entry. I'm behind the reversal bar. I take money all the way down to that low. And then because of this chart, my last one is 8 points away. $800 worth of profit. In PFI, that profit target got hit. And I'm using Fibonacci, momentum, direction to establish where I anticipate the market to go. So PFI, if you're jumpy and emotional, you're right where you need to be. So why not keep it pragmatic? Why not keep it methodical? Why not keep it mechanical? Because what's going to happen to everybody in this room is you're going to do this so many times that you're going to recognize when it's time to take more money. And you're going to learn through your chart reading when it's time to jump ship because things are changing. But until you have the wherewithal, until you have the chart reading to do it, what I've done is provided you a plan that is designed to keep you safe, to keep you focused, to keep you on the absolute best of the best. And then what you'll find, like Alan did, is that you'll follow it to the letter until you realize that there may be opportunities to carry it just a little bit farther. Beautiful entry. Look at that entry. Great entries create manageable trades. Is everybody cool with that? High probability trend trade, focused on the best of the best. Guys, once you're making money consistently, do whatever the hell you want. You're going to grow. My plan is not this plan. My plan was this plan at one point. But if I'm not making money consistently, and let me say this as loud as I possibly can without hurting your ears. If I'm not making money consistently, if I find myself not hitting my win percentage, if I find myself losing more than I win, I will automatically revert back to the keep it simple plan to refocus myself. So if you're on Apex, if you're on Top Step, if you're on one of those prop firms and you're trying to get back and you have never, maybe you haven't even been funded yet, or maybe you got funded and cocky and lost it, right? Or maybe you find yourself slipping and you're feeling a little bit lost. This plan was designed to get you found. This plan was designed to let you refocus just a little bit, to get your bearings back, to get back on the side of success and continue to grow and continue to move forward. Yesterday, I lost my cool in the room a little bit, and I apologize to anyone and everyone that was in this room, right? I apologize to anyone that was in this room that heard me lose my cool a little bit. I did a little bit, and I don't. That's not me. And I did it, guys, because sometimes the answer is no. If you have kids, you know this. Sometimes the answer is no. Dad, can I have candy? No. Damn it. And your kid gets mad because that's not the answer that they wanted to hear. And sometimes I'm going to give you the answer that you don't want to hear. Sometimes I'm going to tell you that you're breaking rules and you're forfeiting advantages and you're doing things that are robbing you of success. And I see that happening from where I sit. Yeah, I do have kids and I love you all, right? Guys, I promise we'll get to where you want to be. Keep it simple initially. Keep it focused. And we'll do it, right? Look at that 50-50 trade. You got to be okay not taking this one as a new user, right? It's a termination. We're getting a full reversal, but I'm right into a fib with no triggers through it. I have to be okay not being in this trade. I have to be okay sitting on my hands because I don't know if support's going to break or hold. And then finally, one more. Third divergence pushes it all the way up to the mid-band. The large triggers don't follow. And this market finally smacks into Fibonacci support. Everyone that took $100 on this trade and got stopped out break even, you did amazing. Everybody that changed their plan just a little bit based on patterns and kept their stop above the reversal bar, you did amazing. Everybody that skipped this trade because they couldn't figure out if it was actually a trade, I need to see a picture with your rules written on it. And let's make sure that you never miss that one, right? And guys, this is what we do every day. Every day, we're going to talk about advantages. And every day, we're going to put it together. And we're going to put it together through pictures. And every day, I'm going to give you feedback. And every day, we're going to get one step closer. But right now, I got to get rid of a little bit of this hydration. So I'm going to take 5 minutes. I'm going to rest my vocal cords. And when I come back, we're going to start looking at the pictures that you guys posted, guys. We're going to get into what is my favorite part of the classroom. Looking at what you did, answering your questions, talking about what you need. Because, guys, I know how to read charts. And because I know how to read charts, I want to get you where I'm at. And one day, I want to be where guys like Jerry, I saw him enter the room here. Jerry's 7 years ahead of me. I don't trade like Jerry, and Jerry doesn't trade like John, who's 20 years ahead of him, right? We're all on the same path. We're all just trying to make money. And when a termination condition is reached, you couldn't pay me to enter at the area inside of favorable large triggers because it removes the advantage of a clear path. No matter what happens next, my path isn't clear. And look what the market does. Cool, right? All right, guys, I'll be back in a minute. That's as preachy as it gets today. We're going to focus on patterns and rules. Patterns and rules. Back in 5. Oops. All right, I'm back, and we're going to go through some pictures. And guys, what I want to do, the first thing I want to do is, yesterday afternoon, I decided to go through the KISS plan on the S&P yesterday. And the S&P hasn't been moving great. But I'm going to show you what happened yesterday if we followed the plan. Here's our first one, 50-50. Divergence prints, and we choose not to take it, and it keeps us from getting stopped out. Amazing. Here's the next one, 50-50. The rules are met. Probably a small loss. Medium probability trade, guys. They're going to lose every now and then. These are so big. Once again, 50-50 trade. The rules aren't met. That divergence prints. It saves you from a loser once again. Absolutely beautiful. High probability trend trade. Easy winner. $50-50 trade. The rules are met. There's your entry. There's the divergence that prints that has you manage out. Easy $100 trade, guys. Not expecting home runs from medium probability trades. And then one more absolutely picture perfect high probability trend trade winner. Another easy $300. Guys, yesterday wasn't an unbelievable money-making day in the S&P, but the reality is it was a $500 day or a $600 day with patience. And it wasn't the winners that were making it so spectacular. It was the ability to avoid those losers, to not take those lower probability trades when the rules aren't met. And that simple KISS plan was worth $600 yesterday. And let's do that math one more time to clear it in perspective, guys. That's a $3,000 week. That's a $12,000 month, and that's $144,000 based off of following a very simple plan on a day that only offered 6 opportunities that fit or broke the rules. That's not so bad. So I'm going to scroll back, and we're going to look and see what you guys posted today. But I did that yesterday because I'm like, well, I'm going to go through and double check the KISS plan. And I'm going to see what it looks like. Can you guys hear me? Okay, just making sure. All right, T. The trend is up. I love it. You took the momentum trade, quick profits. And then when it comes back and gives you a high probability trend trade, you jump in again. Little jumpy on the profits. As you're learning the software, guys, this is where one of those take it for 100, get break even. That was a huge win all the way up to 81.43. A lot of money to be made. And as you grow with the software, as you get comfortable, take that emotion out of it, right? Get rid of that emotion. Keep it super pragmatic. If then, absolutely, T, we all do. Sweaty palms and fast heartbeats. Does anyone else do this? Oh my gosh, this was how I traded in the beginning. Oh, I'm in a long position. I better move this down here so it has more room to run. And oh, let me make sure I'm not missing something over here. And maybe if I do this and I drop it down here, it'll help. And oh my gosh, guys, this was my life in the beginning. Palms sweating. You know what I do now? Now I just take the trade and I play on my phone. Because if I'm taking the trade, the rules are met. And if the rules are met, I know that I've got a 70% chance of winning on these high probability trend trades. So T, you're going to get there. And this is why, once again, I just like to embrace the idea that you can keep it really simple in the beginning and you can keep it really focused. And you've got a wonderful set of scenarios, if then, to take some of those emotions out. Yeah, the rules met or not, you get stressed. You'll get over that, Ziba. Or you never will. You may not ever get over the stress. It took me about 1.5 years, 2 years to really start trading stress-free. It didn't mean that I couldn't be successful. It just meant that my pulse was still cranking. And then PFI, we talked about this one, right? Not high probability trend trade because the momentum isn't present. So we could call it medium probability, still having the advantage of an entry area, still having the advantage of a clear path, just forfeiting a little momentum. And guys, this is what you're going to do when you start to learn to read your charts. You're going to say to yourself, I have so many other things in place that I'm willing to take this trade. That's how plans develop, guys, but you got to see these patterns over and over. There's your 50-50. There's no divergence. There's your perfect entry, and you got stopped out just a little bit below. And that's kind of a tough break on that one, Jose. And I was looking at this one this morning when it set up. You need at least 2 years, Zeba. I was looking at it when it sets up, and I think that you did exactly like you should have done, right? You did exactly what you should have done. You put it below. You can put it below the 1-to-1s. If I'm going to use the 1-to-1s, the 13, man, I'm okay putting 10 ticks of risk on a trade. If I'm in at 20, I'm okay with a 10 stop, right? It still needs room to marinate a little bit. And when I talk about 12 to 14 ticks, and Jose, your stop placement was perfect. Buy that hole, just put it outside of it. And what I find is on a trade like this, that looks like this, that feels like this, I have all these advantages. I might even put my stop below this fib because I know that this area has to break, right? And it makes sense that they might retest it a little bit and overrun it a little bit. And that's going to come through just repetition and confidence in the looks and knowing that because you came from a good bottom and because the momentum was that strong and it was 90% through and there's no divergence, you'll be willing to leave just a little bit extra on there. And then what you may do is even if you do get stopped out, the nice close on the right side of those small triggers gives you an opportunity to still take advantage of the root of the move. And that's one thing that'll happen too, guys, is sometimes these trades won't work, but you'll devise a plan through repetition of how to still look for a second chance entry. And Jose, I think it's a great trade. And I think you did a good job on it. And I think that the management was appropriate. And I think that as consistency and comfort come in, what you find is there's a willingness to risk a little bit more. 50-50 look, it's not a 50-50 look with the mid-band, Gary. It's only 50-50 with this fib. Gary, are you with me in here? And guys, this is a great lesson. Your mid-band is only a termination condition if the large triggers are a full bar away. Your mid-band is a termination condition if the large triggers remain a full bar away, that gap theory. So right here, Gary, yeah, for sure. But right here, that mid-band is no consequence, especially coming from a great top. So we're 50-50 on a fib that really has 80% of my trigger lines through it. There's no divergence on my small chart. The area for entry even lines up almost with an HVA. I'd take this one all day long. All day long. Does that make sense? And guys, the idea is the gap theory, and that's when the midband is going to behave as a termination condition. And the gap theory, it simply says that if price reaches the midband and the large triggers are more than a full bar away, if there's room for a reversal bar back to those large triggers, then we're going to give this midband the credit that it deserves as a termination condition. And we're not going to trade directly into it, and we're going to anticipate a bounce to close that gap. And you see it from midbands, you see it from Fibonacci, right? Both directions. And what it does is it keeps you from going after that short. No worries, Big O. It doesn't sound dumb. Big O, how long have you been with us? A week? And I think that the most important thing, 2 days or 2 weeks? Either way, it's okay. You're brand new. Big O, there was an awesome interview with Tom Brady a while back. Well, it was an interview with Tom Brady, but they showed it after they talked to rookie quarterbacks in the NFL. And when they were talking to rookie quarterbacks, the one thing every quarterback said was that they couldn't believe how fast things moved. They couldn't believe just what the difference was between college and pro, and how fast and how difficult it was to react accordingly. And then they went to an interview with Tom Brady with his experience, and Tom Brady said the exact opposite. He said, you know what? It's almost as though everything is in slow motion. He goes, I've seen all of this stuff so many times that anticipating becomes easy, that recognition becomes easy. And it literally feels like the game is slowed down. So Big O and anybody else that's brand new, if you're not catching these things right in the moment, that's okay. You're right where you need to be because you are brand new. And this is exactly how you can fix that. Or you can accelerate getting to where things slow down. Big O, go through this this spreadsheet that I share in the classroom. And I'll share it one more time just in case you don't have it. But remember that recognition comes through repetition, guys. Recognition comes from seeing the same darn thing over and over and over. So let's click on the first one, Luciano's perfect trend trade short. And this is the look for the perfect trend trade short. And so Big O, what I'm doing as a brand new user is as I'm looking at this picture, and even more importantly, I've got my checklist next to me. And I'm saying that's odds favorable momentum because of the separation. And if I have a moment where I'm like, oh, is that odds favorable momentum? I can always go back and go, let me just verify that that is in fact the best look for a short. Yep, it absolutely is. And then I go back to the picture, figure out which one of these is the picture. Whoops. And I go back to the picture and I go, well, there's no termination conditions, and price didn't reach an area, and the only area is all the way down here, so that's probably a great target. And once these are in place, there's my reversal bar, and there's my area of resistance inside. So I'm looking at this Big O without any worries about the live market. I'm not trying to be a successful trader right now. I'm not worried about anything but recognition initially. And then when I start seeing these a couple times, right, and I click on the next one, I begin to recognize these common threads. I begin to recognize that, wait a minute, all of these perfect shorts look pretty much the same. And all of these shorts all revolve around strong triggers and nothing in the way, and those pullbacks to resistance. And then I say to myself, well, shoot, if I go to the live market, that's that perfect look for long. That's that odds favorable momentum going up. And I start to recognize it instantly. And then I'm like, okay, that's good, but let me think. I think I have a termination, and there's a fib, but the triggers are through. And what did he mean? But hold it. They're not through this one either. And I'm not sure what's going on here. And I think it's a term. Is it not a term? And by the time I process this as a brand new user, man, it's already gone, right? But you can still go, hey, wait a minute. I missed it. But that was a pullback to support inside of favorable large triggers. And hold on a second. This is one of those 50-50 trades. And then you can take that picture and you can annotate it. And so by finding this just a little bit after the fact, it puts you in a position to speed up that recognition. And then what takes you 30 seconds to recognize suddenly takes 20. And what took you 20 seconds to recognize suddenly takes 10. And then it takes 5. And what you find is it becomes instantaneous through repetition. And guys, if you've been with me for more than 30 days, can I get a yes, Big O? That's exactly how it works. And then what you start recognizing is what Paul just said. Well, there's divergence on a 50-50, and the only place that I would ever consider taking it with a loss of momentum is at the bottom of the window. You're adding criteria to that very solid plan. So Big O, I don't want you worried that you don't see it on day one. And I don't want you to worry that you don't see it on week 2. And now there's 2 divergences on a 50-50 trade. And now I'm losing more advantages. But that took me just a second to see. Big O, does that make sense? And for those of you that are thinking, I just don't see it fast enough yet, you will. There's no doubt in my mind, you will. And the more times you see this happen, the more repetition that you get, the faster it transpires right in front of your eyes. And it's pretty amazing. And I think that was my little sidetrack, because what we were talking about, Gary, is that mid-band isn't in fact a termination condition because the large triggers are not a full bar away. And that was a great looking 50-50 trade that didn't work. But don't go looking for reasons that the rules weren't met if it doesn't work. Look for the reasons to see if they were met. Because if they're your rules, the chances are they win more than they lose. You don't want to start forming opinions that deviate from your rules. And then, Jose, you didn't take it because of the multiple divergences on the large chart. So, Jose, you didn't go short because the mid-band was reached and the large triggers are up and you kept having divergences higher, right? Jose, what a great use of the 21. I like seeing that. And then, Gary, we have a termination, and look how it's kind of solidified with 3 divergences. And there's your HVA trade right there at an area, right at the small triggers up from a great termination. And, Gary, that was your long if you were going to take it. But what was the challenge with the long? Is that target had already been reached. That area had already been reached. And guys, this is an HVA trade. This is a trade that you may add to your plan later in life. You're doing great, Jose. And just the fact that you incorporated that 21 and you took the information and you made it a part of your trading those other charts, I think that it creates an advantage. A problem on the 21 just exasperates the problem on the 13. And then here's that 50-50 trade. Once again, coming from a bad bottom. So if you're using the KISS plan, guys, this is no trade. With divergence, if you're using the KISS plan, this is no trade. You waited, and Gary, you waited for market flow confirmation. But even with confirmation, the rules weren't met. Well, yours may have been. Yep, because you're waiting for the signal. That's okay. But you also didn't have that good bottom. So guys, as you grow with the software, that initial KISS plan keeps you out of this trade. And then you'll begin through chart reading to say, well, maybe if there was no divergence, I might take it even though it's a bad bottom, right? Or you might say, if this was a good bottom, if this was a termination, this one divergence doesn't scare me. And your plan is going to grow as you grow with the software. But this is one of those instances where just embracing simplicity initially keeps you out of a loser. It keeps the powder dry. Let me figure out where we're at. Craig, I think I missed your chart. There we go. Woo! Craig nailing the momentum style trade. Awesome momentum. Everything says up. And you just take a chunk when it clears and you get out at Fibonacci. And then when we get close, you say, I'm pretty good. And then, Craig, that was an awesome momentum opportunity right there as well. That's a good spot to add on contracts where it breaks, pulls back to support, and continues through with all this momentum. Great trading, Craig. Very nice. Gary, it's okay. When I say go back to simplicity, guys, there's a reason. There's plenty of trades in that KISS plan. Plenty of trades in that KISS plan. You'll stay busy, especially as many charts as you're watching. Whoop, we saw that one. As many markets as you're watching, you'll stay busy. Hey, what's up, Em? I love it when you guys give me the faces with it. M, killing me here. Termination creates a full reversal. Full reversal gives the best odds favorable look you can get. This area with the potential to break is like 80% broken already. No divergence. Perfect entry. It's a little bit low. Gives it room to breathe. Money all the way up. And the only thing left to do is go ahead and let that second contract run to that final contract, go to the fib, right? You already got paid on 3. Let that last one go. Beautiful trade. Solid trading. Everything that we could hope and dream for. So you know what? I'm going to steal this one. And I'm going to grow my spreadsheet a little bit today. And I'm going to call this Lady P, take care. Hey, Lady P, I'm not seeing anything from you these days. And I know that you're working on things. If you're too busy to post in the room, send me a message. I want to make sure you're on track. I want to make sure you're doing okay. I know that light bulbs are just coming on. And what I find is that people that try to do it on their own don't always get there. Feedback is a wonderful way to get you to where you need to be. And I'm not trying to put the pressure on you, but I want to see these trades, right? Well, then let's get you fixed. Let me know when you have time. Tomorrow, remind me. And let's go through posting together and let's make sure that you're 100%. Or reach out to your salesperson and they'll help you as well. But before you split, let me give you one thing. I'm going to give you a link from the user guide. Okay. But here's a quick how-to tutorial if you have time this afternoon when you're sitting around. Have an awesome day. So M, I stole that one. I like everything about it. That is perfect execution on a 50-50 trade. And then Wells, I know you had to leave. You're not here, but let's see what Wells did. Wells has odds favorable. Everything says up. He said he wanted to enter at the tail. So this lets me know that Wells and I need to have a talk about rule number 3, right? He wants to enter at the reversal bar rather than waiting for the pullback to support. So what we're going to do for Wells is I'm going to copy this and I'm going to send him a message real quick. And I sent him a quick message, and we're going to talk about rule number 3, guys. And that's why, because everything says up. We're from a pivot stop out. The market's cranking 50-50. Beautiful pullback to support right inside of favorable large triggers. So we're going to teach E how to get in at 21 instead of 31 and turn this 9 ticks with a bunch of headache into 20. And that's what the class does, guys. It's all refinement over and over, taking what you're doing and trying to make it just a little bit better. I just got one right here, PFI. So I haven't gone through it yet. I got this one, though. Why did you reverse your charts? Why are you looking at the 5-1 first? And I'm asking, you're not allowed to call yourself an idiot in my classroom. If I don't call you an idiot, you don't get to do it. That's my rule. All right. So you tried to watch the CLNES, but you put your entry chart before your make sure the first 2 rules chart, right? So what does that do? Just naturally, that focuses your initial attention over here, right? In PFI, beautiful entry. But the rules weren't met. And you said that you had a clear path. But PFI, and let me know if you see this. I want you to check this out. This was when you hadn't reached the target yet. There's your target. There's 1-to-1s with absolutely no trigger lines broken through. This was your pullback to support inside of favorable large triggers if it got you. This one, where you entered, those 1-to-1s had already been reached. Price had already reached the area, and none of your trigger lines were even close to the area. So 2 divergences shouldn't make your stop tighter on the wrong entry. You were looking at the blue fib, right? You're saying, I've got a 50-50 here, or the triggers are above the blue fib. Hell yeah. So much so that you forgot to recognize that it reached that target. But do you see how this entry gets you to the target? This entry is on the way off of that termination condition. Then it wasn't your money. If it didn't hit your entry, it wasn't your money. Hardest thing for anyone to ever realize, guys, is that if it doesn't hit your entry, right? If it doesn't reach your area of support inside of favorable large triggers, it's not yours. This isn't your money. If it doesn't reach your rules-based order, if it doesn't reach your rules-based entry, it's not your trade. And just because it didn't get you there doesn't mean that the rules change, doesn't mean that you're entitled to the one that hits support inside of favorable large triggers, because at that point, these 1-to-1s said that you had a snowball's chance of winning this trade. And they separated you from your money quickly. Termination condition. Does that make sense? Man, and that's one of the things, and no, that's good. I won't tell you how long it took me to learn this lesson. PFI, on my spreadsheet, the termination condition section used to be called the Mark Novak section. Safia, you know I don't give feedback on trades. But PFI, I did the same thing. I traded in termination conditions all the time. So much so that when I started recognizing that pattern on myself, as the market was coming up and I was thinking about taking a long, before I did anything, and this is a true story, before I did anything, I would take a quick picture and I would have to identify whether or not I had reached a termination condition. Because I didn't realize I was doing it. I didn't realize that I was trading into termination conditions until one day I took this long. And this is a true story. Some of you that have been around a while may remember. One day I took this long right here. I got you, Safia, I promise. And my brother asked me in front of 100 people, Mark, how much longer are you going to trade into termination conditions hoping they break? Because you've shown me about 50 losers into it. And that's when it finally clicked. Probably 50 to 100 losers later, I finally stopped trading into termination conditions. And then I waited for termination conditions to create full reversals. And I waited for that odds favorable momentum. And I started looking for areas of resistance inside of favorable large triggers when the market was coming from a good top, when the momentum was strong. And I said to myself, this is just a 50-50 look. And if divergence prints, I'm out of it. And if divergence doesn't print because of the strong top, because of the strong triggers, I'm willing to take a shot at it. I like that PFI. And I don't want you to discount the 50-50 trades. They can be great, and you've got to plan for the highest chance of success when you take them. Embrace the plan. Keep yourself busy. It's okay to keep yourself busy. There's a lot of opportunities for money, guys. It's out there. Look at that. Termination condition. Takes you down to that one. Beautiful entry. You're not grabbing those first profits yet, PFI. Right? Don't be so reluctant to take $100. If I walked up to you on the street and said, do you want $100? You'd say yes, right? You'd say, hell yeah, I want $100. So why don't you do it here? There's more money to be made. Why not take the 100? Why not do that 5 times a day? Why not make 10 grand a month? And that goes back to that plan, guys. Embrace simplicity and embrace pragmatic. Don't be greedy. Greedy is for the people that don't have a solid plan. Greedy is for the people that can't read their charts. Paul, you learned something watching that you could hold for the second target. When the rules are still met, that resistance is still likely to hold, right? The rules are still met for a trend trade. The stop still goes outside of the window of opportunity, and sure enough, it makes it. I think that's a great lesson. And the key is going to be able to discern when it's okay to do it. The rules have to be met on the large chart still, guys. Good lesson. Ziba, you saw this gap. You were sure that it would bounce back because it created a perfect bottom in mid-band. It's not a bottom yet. It's an area that may hold, right? So Ziba, you're nice execution. Let me start with that. Let me start with praise. Nice execution. You had odds favorable momentum on this largest chart. Ziba, this is what set up this winner. If you're looking at whatever large chart this is, a 55, this chart said odds favorable momentum. This chart said direction. This chart said that if this were my large chart, I'd be looking for a trend trade on my small chart, right? Does that make sense? I want to talk about just how great this gap trade can be. If this is my large chart, it says take a shot. No divergence. There's my area. And then the gap theory says I'm likely to close it. So this chart leads the way to this chart. You just happen to execute over here. It's a beautiful trade, Ziba. And this is how we trade the gap theory, by letting this chart tell you that it has a shot. Nice job. I love that trade. That trade makes me smile. And then Alan, there's that same lesson, right? When the rules are still met for a high probability trend trade, this is where ultimately you may hold a little bit longer, right? You may hold a little bit longer, but if you don't, you still made $100. And there's nothing wrong with $100, guys. It adds up. Kids today, people in restaurants, who's heard this? And this aggravates me to no end. Who's had the kid at the restaurant go, hey, do you want your change? Maybe you go through McDonald's for some chicken McNuggets and it's $9.87. And the kid looks you dead in the eye and goes, hey, do you want your change? Well, absolutely I want my change, because if I take my change 10 times, that's $1, right? And if I take my change 100 times, that's $100. Guys, this aggravates me to no end. My wife thought I was going to go off the deep end. Don't take my change, because everything adds up. Everything adds up, guys. And the same for trading. $100 adds up. Steve, I pay with cash all the time. All the time. I'm also a tattoo artist and people pay me in cash, so I always have cash in my wallet. There's the trade, 50-50, divergence prints. You got a signal. You took your entry. You followed your rules perfectly. Great job, Gary. Beautiful, beautiful trade. I am PFI. I'll send it to you. Passion is a wonderful thing, guys, and I'm passionate about art. Gary, that was beautiful execution, man. Perfect, perfect, perfect. GWC. Termination. You get the full bar. There's that momentum style entry that John Novak teaches. Once again, perfect execution, guys. Perfect execution. Termination. For those of you wondering about that John Novak momentum trade, this is it. Textbook. It starts with a good top or bottom, an area where no trigger lines have gone through. A full bar prints. When that full bar prints, you take a no divergence pullback to the 1-to-1s and mid-band right there at the small triggers going up. And zoom, zoom, zoom right into the mid-band. Beautiful. I love everything about that trade, GWC. Perfect execution. It's repeatable. And then once again, there's that odds favorable. Everything's pretty. Perfect entry. And you said rather than just waiting and seeing what happens, I'll get paid twice at 74. Nothing wrong with a $240 trade. Guys, this is when greed leaves the building. This is when greed turns into a paycheck, or the lack of greed turns into a paycheck. I love this trade. GWC, that's, what is that? That's 220 there. And then we've got another 220, 320. That's $450 in two rules-based trades. $450 profit in 5 minutes in the market. Rules-based, 100% pragmatic. Can anybody make a living off $450 a day? What is that? $1,350 a week, I think. 27, 5,400 a month. That's $60K plus a year. Beautiful trading, GWC. Thank you for sharing that. Reminding us that it doesn't have to be difficult. It doesn't have to be fancy. Sometimes you can just take advantages and turn them into opportunities. When a termination creates a full reversal, there's that first opportunity. Oh, and you got stopped out on the pullback right at the pivot stop out. So you waited for everything to clear and you take the momentum style all the way up to the fib. Nice recovery, Em. Nice recovery. I think you handled that well. I think that tiny little loss is a very acceptable loss. And as you grow with the software, you're going to recognize that a pivot stop out right at those large triggers after a great termination with everything screaming up really creates a great opportunity for an entry. Nicely done. You guys are making me proud right now. Zeba triggers past the thick blue fib. That's not a fib. Not sure it was a good bottom. What is this baby blue line? So guys, sometimes it worries me that you can be 5 months into it. Thick blue on top, where, right here? It's a fib. Sorry, you were pointing to this one, baby blue line. And it is, it's an extension of divergence. So when price reaches it and the triggers don't break, smalls went through it. So if the smalls go through, it's not a strong bottom, right? We want to see that no triggers through. Does that make sense? You want to see no triggers through that area. That's your best shot. This actually created a 50-50 to the downside that failed. It's still a pivot stop out. And then the market comes up and everything says up. And you jumped in on the pull back down, right? You're on the wrong side of everything for a momentum trade. Do you see how if you would have gotten in when everything was going up, it keeps going up? But at this point, you hit a fib. The market's on its way down, and what's it doing? It's pulling back to support inside of favorable large triggers. This is a trend trade. And this is one of those things, guys, where you can sort of... You can say, okay, I reached an area. I don't have momentum on the small chart anymore. So now I have to sit on my hands and I have to wait for the trend trade to set up. It kept going up where? At your entry? Or after it bounced off of support inside of favorable large triggers for a trend trade? Well, of course it did. Because a pivot stop out created a full reversal. Full reversal created odds favorable momentum. Odds favorable momentum gave you a pullback without divergence to the area of support right inside of favorable large triggers. It's a textbook trend trade. So Ziba, the difference is, and I love this because this is a good lesson. This is a great lesson. Your momentum style trade that you were trying to take, that happens right here. When the momentum is strong and cranking up, right? And it takes you right to that fib. Your entry, all the bars got to the other side. This was like your fourth down bar, right? The momentum is gone. Does that make sense? The momentum is gone at this point. Therefore, this can't be a momentum style trade, which means at that point, you say, where's that area of support inside of favorable large triggers? Everything over here still says that it's going up. But now I know because of this look, I need to be patient and wait for that pullback to the area inside. And then what you do is you capitalize and you just take that beautiful trend trade right up to the next fib. Does that make sense? You got caught in between a momentum trade and a trend trade there. You kind of traded the transition. Perfect. I think that the idea was right. You were just late on the execution. You're welcome. And since you were late, it doesn't mean that it's over. It just means we have to be a little bit patient. Great trade, though. It is a great read. Great large chart read. And everything starts on the large chart. Safia, termination, everything up. It pulls back to the mid band. Oh, gosh, I don't know. There's just too much back to those large triggers, right? You recognize that. It was just too early. And then when it comes back to the area, there's that trend trade, and it makes it pretty easy for you. Are you with me so far? Too early. You reckon, because your large triggers are way the heck down here. Way down here, right? Gap theory. Boom. And there's that potential that they're going to close it. So let's get this one out of the mix. And then when the trigger lines catch up and you have those areas and it's kind of pulling back right here, I love it. First shot, and you execute beautifully. But then you make the decision to trade directly into that fib when it's already been hit, right? You're taking that momentum style, and the momentum carries you to that second level fib. But one of the beauties of this trade is being able to take it with nothing in the way, right? Nothing that creates a potential bounce, nothing that can rob you of that upward momentum. And I think that the trigger lines look great, and if that red line wasn't there, it'd be easier to get on board with. And it's kind of the same thing that Ziba had going on here. Once it hits that red line, that potential for a bounce gets bigger on the NASDAQ, right? They react to these areas, and it just kind of robs you a little bit of that potential momentum. And yours worked out. It did go to the second line, and I'm always thankful when you guys get it. But then really just a complete lack of respect for that fib. And you gave it all back on your second, on two contracts. That's a termination condition, isn't it? That is flying into. You hit your first target. You took your entry. You took two entries. I see an exit below the entry. That's the second entry. Okay, so you exited here and then you got back in because you wanted more money. So you got in two contracts here, and then it smacked into a fib with no triggers. and you got out break even. Very. I like it. And I love how quickly you've learned to read your charts, right? So let's ask ourselves, what if with all this momentum, with all this direction, guys, this is how I think about my trading too. What if I got in right here and I just said nothing's changed? And I just closed the gap with all that momentum and just took my 4 contracts from here to here. That's a better day, isn't it? That's an easier, less stress day. And that's what we're learning to do right now, guys. We're learning to take all this awesome knowledge, and we're turning it into less stressful trades. We're turning it into higher probability trades. We're turning it into more advantages. And then ultimately, we're learning to trust that the large chart's going to get us. No, you're doing wonderful, guys. All of you are doing wonderful. Anytime I say something counter to what you think you want to hear, it's to help you get to that next level. There's the continuation trade, Gary. Termination, everything rolls up. And there's that little pullback when everything kind of agrees to go up. That's iffy, wouldn't you say? After having divergence from resistance, and this pivot didn't come from a fib, that is some scalping moves there. And then John Novak, everything says down from a good top, but because it's NASDAQ and the triggers are up strong, you said, I'll wait for the down bar. You take the close on the correct side of the smalls, and it's easy money all the way down. That's a beautiful trade. NASDAQ traders, don't fight strong triggers up, right? It might push a little further. Even if you got in at the mid-band or this, stop still keeps you safe. But he got the exact same price, but now he's on the correct side of those small triggers. PFI, do you see it? Termination creates a full reversal. This is for everybody. Full reversal gives odds favorable momentum. This best trigger look is going through an area that has the potential to break. But look at how far everything is through that area. Guys, that's a great look. Absolutely no divergence, but because the NASDAQ's a different animal, John waits for the close on the right side. But if he took this entry, his stop is still up here. Guys, this one follows the KISS plan to the letter. And that is 14 points on 4 contracts, 52. That's a $1,000 trade. That one fits the KISS plan. That one fits the exact rules that I talk about every day in this classroom. That's the CEO taking the easiest trades, guys. There you go, Ziva. There's that momentum trade. Right side of everything. Beautiful. And then Ziva, there's your trend trade if you decided to take it, right? Way to grab that momentum. And do you see the difference, Ziva? Now you're with everything. Beautiful trading, guys. Awesome trading. Outstanding chart reading. And we've seen it today over and over and over. Once again, KISS plan for the win, right? KISS plan for the win. Keeping it simple for the win. Guys, the ES is just stuck like Chuck right now. A lot of wobbles. We're coming from a termination. No triggers through. It's creating the full reversal. Just got to get through this area a little bit. Just waiting. Look at this. From fib to fib to fib to fib to fib. How do I stay out of consolidation, Mark? I respect rule number 2. If you're watching crude oil, this is a go make a sandwich pattern. The smalls are up, the large are down, the fibs are holding on both sides. Nothing to do. Don't let that little devil on your shoulder tell you, hey, PFI, it's probably going to break to the bottom, man. Take a trade. Hey, PFI, your small chart has some green on it. Take a long. Shoot. Your hands are stiff from... Some days are like that, right, Jose? Isn't it better to do nothing all day than to lose money all day? Isn't it better to not find a trade rather than to just give it all back? EFI, let's find it. And can I ask, why are you looking for HVA trades? And I'm cool with it. Let's look for them. Where's my little... Let me search. I'm going to go to the Nexgen thing, to the page. I'm going to type in HVA. And here's all the videos. And the cool thing is, PFI, I'm going to show you exactly how it correlates because we've gone through all the pictures right now. And I want you to see this because this is amazing and this kind of reinforces why we start simple and why we learn to read our charts. Let me get to the correct page. I'm going to go to the tutorials. I love HVA trades. They don't set up a lot, but they do. But the HVA trade, you have to have an 8-range chart for it, which means that you're adding a third chart. It's more to look at, right? So make sure that you're solid with simplicity. Maybe this is the next one you add. But check it out. Rule number 1, PFI, says that you have to have a good top or bottom. You have to have a termination condition where absolutely no fibs break through the area. That's rule number 1 for an HVA trade. How does it correspond to the high probability trend trade? Well, rule number 2 teaches you how to recognize termination conditions, right? So there's that top or bottom. There's rule number 2. And once you're good at it in a trend trade, it makes it easy to recognize it for the HVA. The next thing it says, don't trade into a termination condition. If the target's already reached, if a fib has been reached, if the mid band has been reached and it's a full bar away, don't take the trade. So how does the high probability trend trade work its way into that? It works its way into it because we know not to trade into termination conditions. We know that it's always more advantageous to trade from them. And then finally, your entry at the HVA line, right there at the triggers. And we're identifying the point where the market is likely to continue the same way that we do it on the high probability trend trade. But now we're not using fibs, mid bands, and 1-to-1s PFI. What we're using is that high volume area line on your 8-range chart. Jay Solar, I will never scold you. So what happens, PFI, is your fibs hold. And when your fibs hold, your triggers roll. And when your triggers roll, you look to buy that green line on your 8-range. All the triggers above, the trigger lines roll, and this becomes an opportunity to catch the first move before the trend trade. And Nexgen's been teaching this forever. And let me show you this picture. And you want to talk about when you add that trade, and PFI, I love that trade, and it happens more on the S&P and it happens more on crude oil than it does on NASDAQ, is what I've found. But the market goes up and it reaches a termination condition, no triggers through, right? So Nexgen users, all of my rule followers, you know that you're not looking for a long trade. And your brain says either the area breaks or it reverses the market. And if it reverses the market and the triggers roll, PFI, that's your first shot. That's that HVA. And it happens very close to a determination condition. And then if that HVA works and the market continues down and you've got strong triggers, well, there's your trend trade. And you're going to repeat step number 3 until you reach Fibonacci support. And at Fibonacci support, you're going to sit on your hands and you're going to wait. And you're going to say to yourself, it's either going to hold or it's going to break. And if it breaks, you're going to go back to step number 3. And if it holds, it creates an opportunity for that HVA. I love this plan. And PFI, when it's time to start talking about HVA trades, it's similar, but it has more advantages. Because an edge trade, you're trying to go long from a point where you're going to be fighting trend, where you're going to be fighting momentum, where you're going to be doing an awful lot, and it's predicated on a higher time frame. In HVA trade, the area has already held. Your smaller, faster chart has confirmed it with the triggers rolling, and your 8-range chart has confirmed it with your triggers rolling, and it has shown you a line in the sand where the sellers have decided, that's where they're going to unleash hellfire on the buyers. So the area gets reached, it holds, the triggers roll, this becomes our opportunity. In the HVA trade takes a level of patience because there's a high volume area line. When the triggers haven't rolled, you get your butt kicked. There's a high volume area line. They're not at the large triggers, you get your butt kicked. There's your high volume area line. Right there. PFI, can I give you, and I don't give trading advice, but can I give you some chart reading advice? I want you to just X out of the 8 range. And in 30 days, I want you to ask me how to rebuild it, and we'll rebuild it together in class. Don't distract yourself yet. Focus on your rules, on your 2 charts, because the most important thing to know about that market flow chart, about that 8 range chart, is that if your rules aren't true, it's going to distract you and it's going to create a lot of noise that's difficult to read. And when your rules are true, it becomes this great confirmation tool. And man, we'll go through it. I love my range charts. I really, really do. But I don't use all those fancy bars on them. I don't use all those signals on a range chart. I don't use all those antenna bars and those arrows and those yellow bars. Do you know what I use it for? I use it for odds favorable momentum. And that's how I start with it. All right, J Solar, 50-50 trade. No divergence. Coming from the termination. A little early on the entry. And you exit as it pulls back to support inside of favorable large triggers. So the only challenge that I see with this one is that you jumped the gun and then the market did exactly what it was going to do on your stop. But I like that you were able to capitalize with the momentum. $50-50, no divergence, perfect entry, money, money. Great job following rules, beautiful trade, easy money. 50-50. Down here, weaker triggers, right? Weaker triggers, but a clear path. Area for entry, great management. J Solar, can we talk about this one? Because I like this one a lot. And I'm going to relate it back to the advantages. And this is what I really want to stress to you guys. If you relate everything back to the advantages that the large chart provides that you're looking for, on this particular trade, J Solar, you didn't have momentum because of the weak triggers. I'm okay with that because you still had a clear path in an entry area, right? You had 2/3 of the equation, which means that it falls into medium probability. You take the perfect entry right at resistance, right inside of favorable large triggers, and you manage it assertively at your first trouble spot. J Solar, I think it's a brilliant trade. And I know that you took this one with divergence because of the strong triggers, because of the consolidated area. If you're following the KISS plan, it broke the rules. If you're saying, these are my advantages from the good top, I'm willing to forego one divergence with those strong triggers, I agree 100%. It's nothing more than an extension. So you'll take it. If there's a divergence, strong trend momentum on all charts, you're willing to take the trade. I love it. Beautiful. You've created a set of criteria to get into the market, and you're following it to the letter. You're not changing it based on the emotions in the moment. And I think that is the most important thing, right? In here, you don't have those strong triggers yet because they're still down. And since you don't have all the momentum, you're going to forego because of the divergence. J Solar, beautiful. This is the progression of the plan. This is what I was trying to say yesterday, is that it doesn't have to be the KISS plan forever. Do a little bit of study and you'll begin to recognize conditions that maybe change your approach. Just make sure that they're cataloged, that they're repeatable. Beautiful, beautiful, beautiful. Whoop, and that one's not there. J Solar, solid. And then this is the one taking advantage that John talks about. There's your gap theory, right? Bad top, all the way to support. Large trigger's a full bar away, taking advantage of it as it continues up. And J Solar, I'm a huge fan of this one, right? And I think that I mentioned, I'll show you how to make this one the most probable winner. How to really take advantage of that gap theory. And it begins with, let me find Zeba's picture. The easiest way to do that, where is Zeba's picture? The easiest way to take that gap trade, the way you did it, and I love it, great recognition, is letting a larger chart have odds favorable momentum. Let that larger chart say that we're probably going to continue up. And then all this becomes is a trend trade on your 13-2. So all this is a trend trade because your highest time frame says it's time to look for a trend trade. And then you can reduce risk by getting in at the area below the reversal bar, understanding that that's your first target. J Solar's beautiful execution. And then you can add that little bit of extra giddy up, that little bit of peace of mind by making sure that your 21 chart has odds favorable momentum. Nice job. And I want to applaud the fact that it's a plan, right? Thank you for posting. We can't talk about this trade because I have no idea what it is, Safia. You can tell me. No, J Solar, it's beautiful usage, but I think that you can increase the win percentage by being sure that you've got odds favorable momentum on a 21-3. Perfect. Great job. And the cool thing is, J Solar, is you could build a 21-3 with nothing but trigger lines on it just to verify that momentum in the direction. You wouldn't even have to worry about reading all the fibs. Safia, I don't know what you want me to say. The momentum is down. The trend is down. Everything is down. The smalls are still outside the large, and you said, God, I hope it goes up. That's aggressive. John calls it the long to get to the short. That would be one of those things where John Novak has a book that talks about financial suicide. Fighting strong triggers. You're going to get lucky every now and then. Termination condition, but since it's coming from a good top, 3 divergences. Good God, John Novak, breaking every rule that I teach. And doing it beautifully. And doing it beautifully. Because of a chart read. How experience traders justify doing the wrong trade. So guys, let's look at it. Great top, right? Double divergence coming off of fibs, resistance. Every indicator is down as it comes in and it tests support. I'm going to show you exactly why John did what he did. John said, look at this. Everything's down and it reacts to support and everything stays down. And it reacts to support again and everything stays down. And then it reacts again and goes right up to this area with every trigger underneath it. And my trigger lines roll. And you're damn right, with everything saying down, I'm going to see if it retests that area. And if I had to guess, there may have been an exit right there at support, right? He might have taken some contracts off there. And when he gets to the one-to-ones, he says, I'm not willing to lose this trade or lose much. There it is breaking the area, and it pulls right back to the area. And he's looking to get to the fib, but he's not willing to lose on the trade. Breaking them like an artist. Guys, I love it when John Novak shares his trades because it shows you where you're going, right? It shows you where you're going, and it shows you that when you read your charts, great things happen. Doors opened up, right? And remember, John, will you remind me how long you've been reading charts? Maybe post it in the room. How long have you been a chart reader, John Novak? Because now everybody wants to do what you did. Safia wants to know how you did your stops. Ugh. Ziba, there's that momentum style. Goes down to the target. I'm trying to line these up. There's your momentum style, and it pulls back to a trend trade. You take it at the target, take it at the target, because the momentum never waned. And then you did it again on the way down. Nice job. That was a perfect answer, John. Thank you. Where the market shouldn't go. Got your butt kicked for ignoring 3 divergences? Not necessarily. Jay Solar, I don't know necessarily that 3 divergences got you because this divergence broke. All your triggers broke it. That's your reset. Do you remember that lesson? Same thing as areas. When all the triggers break it, it's a reset, right? When all the triggers give above resistance, it's broken. Let's talk about this one. And I like this look, guys. And this kind of fits into why that KISS plan is what it is. So Jay Solar, here we have a 50-50, right? Here we have an area with the potential to break, but it hasn't broken yet, right? And then here we're compounding it with another 50-50. So not perfect, not perfect, not perfect. And guys, this goes back to that idea that as you begin to learn and read your charts, remember the same way this look here, Jay Solar, with a clear path might get you into that edge trade, that gap theory trade. If this isn't perfect, it's okay to insist that this is. The same way, if this isn't perfect, it's okay to insist that this is. Does that make sense? And this is why I talk about in the beginning, simplicity keeps you focused, and then we get to have an awesome conversation about every picture. And that's the one that created challenges. Great job. Dr. P, I hope so. John Novak will probably, if it's not already live, it will be posted. Absolutely, Dr. P. So I love it, guys. That's a great lesson. If you're going to incorporate the chart, it can be helpful on those 50-50s. And I know that that's everybody's challenge, right? Everybody's kind of like, oh, those 50-50s. There's a way to take them. Everything says down. John Novak went down. And then Jay Solar, there's your trade, right? Clear path with a little loss of momentum. So while it gives up the momentum side of things, the path is clear. The entry is perfect, right? Area likely to hold. And John Novak takes it right down to Fibonacci support. Jay Solar, you took the exact same trade. PFI, you took the exact same trade. And you guys may not have realized it at the time, but you were taking those 3 solid advantages Those three awesome advantages. And when you got rid of one, you insisted on the other two. And that's what the simple plan revolves around. Never giving away too much, right? And then when Fibonacci support is hit and none of the triggers go through, you just wait for the reaction. John Novak, beautiful trading. You would have stopped at the first sign of trouble. So you might have gotten out right here. And that's okay. That's 55. You're in at 59. That's $160 on 2 contracts, right? But didn't your large chart say, let's go? So if there's no terminations here, maybe take half off at the trouble spot, right? Get to break even and see if that large chart does in fact carry you to the next Fibonacci area. And that's how management plans grow. He traded to the term, Ziba. He traded from resistance likely to hold straight to where the market was likely to go. And then he stopped taking trades when the area was hit. All right, here's crude oil live. This is what I see, PFI. 50-50 that failed. Price reaches support, absolutely no trigger lines break. Price reaches resistance, absolutely no trigger lines break. Price reaches support, the ugliest 50-50 ever that fails. 2 divergences. Pivot stop out at resistance, another termination condition. And now I'm directly into 1-to-1s and a divergence low, and absolutely no trigger lines have broken through. So what I see, PFI, is I see the market stuck in a range, right? And they're trying to push through. They're trying to get out of this range. Right now, the sellers are trying to get out of this range. But because there's been such a big brass knuckle brawl going on for the last hour, I don't feel the need to trade into this termination condition, hoping that the sellers win. Does that make sense? That's how I read it. Let's go to the termination condition section. Guys, anytime you're wondering, blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. Absolutely. So PFI, what those yellow 1-to-1s are, those yellow 1-to-1s are a fib that print real time. Those are fib from live market swings. Tick, tick, tick. It doesn't matter. They print real time. They started printing, and they'll continue printing until they're not a part of the equation anymore. So they started printing because of these pivots. So this fib is printing live in the moment. All of my trigger lines remain above it. Of course not. It's directly into a termination condition. Those 1-to-1s are the same thing that killed you on that long earlier, right? Yep. If it will keep going, the triggers will break. Yep. If the triggers don't break support, then you're good. John, great chart read. And then Walter, why are stops needed? Stops are needed because we have to manage our risk. Stops are needed because if the market goes beyond the point where it should go, right? If the market goes beyond that area of support inside of favorable large triggers, we want to be out of that trade. Jay Solar, I don't. I've been teaching this class a long time, and I've heard most questions, so I've got a pre-boxed answer. And sometimes I get stuck, and then I'll go to the experts. I'll phone a friend. So Walter, those stops are where the market shouldn't go, right? Those targets can be placed where the market is likely to go. And John's absolutely right. Losing $120 you can recover from. Losing $1,000 because you hoped that the market would do what you wanted it to do becomes detrimental. So when we talk about those stops, when we look at the entry, you can identify where the market shouldn't go if you're going to stay in that trade. So we're going to limit our risk. And then we have those targets in place so that we can get paid on that trade. That's how the money gets into our account. Your stop, your ATM, Walter, 12 ticks gives me reaction time, right? So if I throw a football at your head from 3 feet, you have absolutely no reaction time. It's probably going to hit your head. But if I throw a football at you from 12 feet, you're going to have time to get your hands up, to do everything you need to do to keep yourself safe. So if I start at 12 ticks, it gives me time to put that stop where the market shouldn't go. Does that make sense? Awesome. You're very welcome. And then, John, there's a great video from Mark Douglas. And ladies and gentlemen, you survived the day. We made it to the end of the day. Whoa, I think I just closed out my crude oil. A lot of great lessons today. I'm going to reiterate one time before I leave that this is a plan to make it as easy as possible on you until you progress with your education and you begin to recognize patterns faster. And then when you recognize patterns faster, your plan may change. The way Jay Solar's changed. Jay Solar was able to amend the easiest form because of his recognition of how strong triggers on every chart tend to push the market in the direction. So, guys, great job today. Thank you for taking it easy on me today. Great pictures, great lessons. We're going to repeat every day, guys. We're going to do this every day. We're going to reinforce rules. We're going to study the patterns. We're going to watch the live market. We're going to look at your charts. We're going to embrace the idea that plans don't need to be difficult. And we're going to do this every day until everything is second nature. And you're going to ignore John Novak. I'm just kidding. But you're going to use this to understand that this is where you're all going, right? When the triggers break, when the path is clear, when there's no divergence, you're going to put yourself in a position to take this trade. Even though it's not the prettiest look, your chart reading is going to get you where you need to be. So don't be in a hurry to be at the finish line, guys. Enjoy the ride. Just do the right trades. Present them, get a little feedback, right? I'm pretty easy most days. Most days. I'll continue to stay that way, guys. Use your spreadsheet, take your pictures. I'll see you tomorrow morning at 9 a.m. and we're going to do it again. And we're going to continue to do it every day. All the triggers are below. 2 divergences print. If I know my brother, he's waiting for a close on the correct side of the small triggers, and if he never gets it, he won't take that trade. But if he does get it, dollars to donuts, he's probably looking for an entry somewhere around here with a reversal bar. Because he has a clear path, but he doesn't have the entry and he doesn't have momentum. So it becomes a chart reading thing. For me, 2 divergences, strong triggers, this one's off the books. It's probably going up higher. I know that because I've seen it 1,000 times. Have a great day, guys. I appreciate you being here. I will see you in the morning. Take care, everybody.
the new entry into the podcast. Don't fall for any scam. I'm not going to ask for your personal information. I'm the only one that will be announcing the winner next week. Just 1 week. Leave as many comments as you can. I just want to give you some tips. Order filled. Stop filled. It's giveaway time. I'm giving away. It's giveaway.